And go for your goals, go for your dreams.
Now, the gala event took place last night, hosted by previous honoree Gloria Estefan. The show will air Wednesday, December 27th on CBS. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Jess.
Thank you, Amy. We appreciate it. And coming up at the top of the next hour, Paul, I know you're excited to hear from George Ferguson. He's a senior aerospace and defense analyst with Bloomberg Intelligence, who's going to talk to us more about Alaska Air and Hawaiian Airlines' merger. If you look at HA is the ticker symbol for Hawaiian Holdings, up more than 170% today. This would be on pace for a record close there. Yep. What a move, but something we'll continue to pay attention to, and we'll definitely enjoy hearing whatever George, his insight has to say about this merger.
Yep. All right, here we got some big moves in November in the markets. Based upon, some sense that the Federal Reserve is going to cut rates in 2024. What's interesting is some of the small cap stocks are starting to perform well. The Russell 2000, the benchmark gauge for small cap stocks on Friday, outperformed the S&P 500 index and climbed 3%, extending its 9.2% rally in the past 3 weeks. That more than doubles the broader benchmark 4% gain in that space. So that sense or suggests that maybe it's time for, I guess the breadth is kind of broadening out here for the broader market. You're seeing it broaden out,
switch over to small caps, which we know have had a really tough stretch, not just in recent months, but over the past few years. So the Russell 2000, if you look at this spread between that and the S&P 500, on pace for its worst 3 years relative to the S&P 500 since the late 1990s, but obviously getting hit hard. Gina Martin-Adams and her team over at Bloomberg Intelligence looking at the technicals for the Russell 2000, but to them suggests more room to run because they feel like they've once again already priced in a potential recession there, and how much worse could the pain get. But something we're watching very closely on the U.S. stocks team for how small caps are performing, Paul.
Yeah, usually when you think of small caps, you get concerned about their balance sheets and about their competitive position, but they've had some decent performance just recently, so we'll keep an eye on them. The Russell, again, outperforming today, up 0.8%. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing? I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we will break down that potential M&A trade in the airline space, Alaska Air and Hawaiian Airlines. We're going to do that with George Ferguson. He covers all the airlines for us. Then we're going to check in on Shaheen Contractor, Senior ESG Analyst with Bloomberg Intelligence. She's going to join to discuss COP28. That's kind of where they're over there in Europe trying to figure out what to do with some of these eco initiatives out there. And then we're going to talk ETFs. We're going to do that with Johan Grahan. He's a VP and head of ETF strategy at Allianz IM. He's going to join us to discuss ETF flows and the outlook for ETF investing. Like, are we going to get a Bitcoin ETF? That's on top of everybody's mind. But we're going to kick this hour off, like we do, with Mr. John Tucker on the Bloomberg Business Watch.
All right, guys, investors appear to be taking a bit of a breather after all three major benchmarks rose for 5 straight weeks in the S&P 500 right now. 207 stocks are advancing, 296 are lower right now. High volume day, up about 16% in terms of volume on the 30-day moving average for this time of day. Alaska Air, the worst performing stock in the index. You're going to take a deeper dive into that in just a few minutes. Animal healthcare firm IDEXX Laboratories, the best performer, up close to 6% right now. Meantime, at Canaccord Genuity, chief market strategist there, Tony Dwyer, sees a difficult backdrop for stocks.
We're going to see a recession, and at some point, which I think we're at that point, inflation's not the problem. The core PCE peaked in February of 2022. So it's accelerating to the downside. Inflation's not the problem. Earnings growth and economic activity, I think, is the problem.
Right now, the S&P 500, 45 points lower, 1% lower right now, 45.48. The Dow, 164 points lower. The NASDAQ 100 down 290 points. This is a decline right now for the tech-heavy index of 1.8%. Investors betting the Fed rate cuts as early as March. That narrative may get some support this week with the latest data. Friday, we're going to get the November jobs report. And we check the markets for you all day long. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Jess and Paul.
Well, Paul, I feel like since Tom Keene isn't with us anymore right
Yes.
now, we can actually bring up Bitcoin.
Yes.
I was going to talk to him about it earlier, but I was worried it would ruffle his feathers. But if you look at that, up more than 150% this year, and of course crossing that 40,000 threshold that everybody was watching. So what a move there. You're looking at other stocks, especially with Coinbase up more than 4%. Also Marathon Digital, ticker symbol MARA, up more than 4%.
All right, big move into crypto space. Let's bring in our next guest who looks at all this stuff, stocks, bonds, crypto, all this stuff. Tatiana Daurier, she covers the markets for us. She joins us here in our Bloomberg studio in New York City. Haven't seen her for a while. She's been slacking off. I don't know what's been going on.
Oh,
Tatiana,
she has not. She's been doing a lot of work.
doing a lot of work
Behind the scenes.
behind the scenes. Tatiana, what are you looking at today?
Well, I mean, we're kind of looking at this, puzzling rally in Bitcoin and then in gold, which has reversed. And now, we're trying to put on a one-size-fits-all narrative to all of this. But I think, just stepping back, broadly in the morning, the picture really looked like this is just another play on the soft landing, narrative. And we've really now seen sort of this nirvana, really, sweep in markets to all corners, right, to stocks, to bonds, and now Bitcoin. And I'm just getting concerned here that this could easily turn, into an illusion if the data keeps deteriorating, especially if it goes to worsen fast, as there is a risk that the jobs data can do. As we know, with unemployment, it's nonlinear. It can happen.
Which data, when you say deteriorating, is standing out to you? Because it looks like anytime we're getting some of these consumer numbers are off the charts and are still really strong.
Yes, consumer spending, yes, we've seen sort of signs of that slowing with Black Friday, like you guys have probably, I'm sure, have covered, with the pay and with the buy now, pay later options. And then now we're looking at jobs data, obviously on Friday. That's going to be the big news event of the week. And the risk there that Bloomberg Economics is flashing is that the unemployment rate could rise to 4%. And that's really just a 0.1 percentage points miss. So it's a slight miss, but for them, it would trigger all sorts of variety of recession indicators. I think Anna Wong's looking like at 28 of them. And this is when this narrative could easily change, right? Because if we're seeing the economy deteriorate a lot faster than we thought, or perhaps then the Fed cuts will arrive, then that's going to be problematic, especially for risk assets.
All right, so what were our friends in Asia doing overnight? Gold was up by more than 3% to hit $2,000, which is a record, $2,135 an ounce. And now we're down gold, down about 2.3% to 2024. So a major swing in gold.
Yes, I would direct you, our listeners, to read the post from my colleague Eddie Vanderwalt on MLive, on Markets Live, as he sort of has two theories there, right? One is Bitcoin. Perhaps there was some spillover buying from Bitcoin, as we saw the big move, and the other one, which is kind of based on his deeper work on gold, is a whale executing on an option strategy, which sounds very in Asia in early Asian hours, uber thin liquidity and all of that, sort of, to the timing and the scale of those purchases perhaps was aimed at getting the price above a certain point, which looks to be 2,100 here. But, as we see the price action now, it didn't stick gold with a really big move, nearly 3 standard deviations there, down nearly 3%.
I was told there wasn't going to be math here. Standard deviation. You
mentioned Tom Keene. Yeah, you mentioned Tom Keene. It has to be.
You know, it's also blackout week this week, guys. So no Fed speakers on the calendar until that Fed decision next Wednesday on the 13th. So don't expect any Fed speakers to come out talking about policy this time.
All right. Anything else to touch on?
No, I think we'll have a lot more insight after Friday's NFP. That's really going to shed more light on the timing of those rate cuts, as well as the path for the risk rally ahead.
Absolutely.
Also, JOLTS data on Tuesday.
Oh, I like the JOLTS data.
Yeah, I'm looking forward to that tomorrow.
And what are they saying? If I pull up my Eco.
So if you look at that, let's see here. Pull it up on Eco
JOLTS,
Go.
9.3 million job openings. That would be down from 9.55. But the run rate, if you look over the past, 10 years is kind of 4 million, 5 million, 5.5 million. So we're still way high relative to kind of historical.
And jobless claims has become sort of a bigger, focus in recent weeks, especially with those continuing claims rising to a 2-year high. So that's sort of closely watched as that shows us that there's more unemployed that will become sort of be factored in the unemployment rate. And that's why Bloomberg Economics is really sort of more bearish than the street on that jobless rate potentially hitting 4%.
Yep, and again, the forecast is 3.9%, so we'll see how that goes. Tatjana Darier, thanks so much for joining us. Appreciate you joining us here in our Bloomberg Interactive Broker Studio. So a little bit of an M&A trade in the airline business. Alaska Air, Hawaiian Air. I'm not a big flyer of either of those in that part of the world, but I know George Ferguson is because he's a senior analyst. He covers all the airlines and all the aerospace companies. George, what's the rationale behind this deal here? Is it just size, scale, that type of thing?
Actually, I think the rationale here was Hawaiian was in really tough straits, and their friends over on the mainland, on the west side of the mainland, came in to help them. But from Alaska's standpoint, I can't really get it, right? So Hawaiian had a $1.2 billion bond due very early 2016. And so I think really they were going to be faced with trying to refinance it, this coming year, 2024. And if they didn't get it done, I think they would have had a going concern statement, right, in their financial statements from their auditors, which is never good. And frankly, that bond was trading such that it was high teens percent yield to maturities. So it was going to cost them a lot of money to refinance that. And they've got a perfect storm going on. They have the geared turbofan in their fleet, which is creating problems operationally. Asia's reawakening, from a sort of slow recovery in travel. And they've got long haul into Asia, which, they usually feed into Hawaii. So it means that those routes aren't performing as well. The yen, is very low against the dollar, great against the dollars, as you know, which sort of hurts that travel. They've got Southwest in there now competing with them as well. They have the Hawaiian wildfires. Some people, maybe wouldn't want to come to Hawaii right now. So demand is really sort of in just a very bad place for Hawaiian. And I think Alaska looked over and went, these guys have a real big balance sheet problem. And we got a great balance sheet. They're not that big. We could come in here, secure a decently priced deal. And they showed us nice multiples based on 2019 EBITDA. I don't know if this company, Hawaiian's going back to 2019 EBITDA, in the next decade. And so I think they looked at it, though, and said, hey, we could come in, help them with their financing issues, take this company. But for Alaska, I don't see how the deal, it doesn't transform Alaska, right? Alaska gets a little more Hawaiian inter-island flying. I don't know how much that matters. And they add long haul to their portfolio, right? So they get flights into Tokyo, flights into Korea, flights into Australia, which adds complexity to the Hawaiian, to Alaska's operations. Alaska's really, a company built around the principles of a low-cost carrier, right? Single type fleet, which makes operations very simple. Doesn't do anything for their East Coast, lack of East Coast presence in the U.S., nothing about their lack of European routes. So for me, it looked very transactional from Alaska, very, opportunistic. And Hawaii, like I said, needed it for existence.
You're looking at Hawaiian stock, ticker symbol HA, up more than 170% today, on pace for a record close. But then, of course, Alaska Air, ALK is the ticker on that, down more than 15%. So when it comes to Alaska stock price today, Does that feed into what you were talking about, how the deal doesn't necessarily transform that particular airliner, and is that why we're seeing the stock down?
I think so. Again, I think if you're an Alaska investor shareholder, I think you're always looking at this company saying, well, what's the long-term strategy here? Is this going to become? They have two cabins of service. They have a premium cabin and a budget cabin, right? And so they don't look like a low-cost carrier. They deliver. They have a great product, right? But I think if they had these joint ventures with American Airlines, it helps round out some of their ability to sell tickets around the world, gets them some more business travelers. But in the long run, what do you do with Alaska? It's an airline that is a West Coast focused airline, has some good transcon, into the New York region and other parts of the East Coast, but not a very big East Coast presence. Has flights into Mexico and some of those vacation markets, and no international. What does this airline want to be when it grows up? And I don't think Hawaiian was that answer. Could be part of it. You'd have to add a lot more, though.
So what do you think the regulators are going to say about this deal? Because they've been kind of a little stingy there on some of these airline deals.
Yeah, me and Jen Reevy just keep fighting over regulators and what they're going to say, what they're not going to say. My take is I don't see any reason why you couldn't get this past the regulators, right? Hawaiian is so small. They have like 60 airplanes compared to Alaska's 200. Again, they're inter-island Hawaii, which Alaska doesn't do, before this transaction. They have some overlapping flights, and those flights are largely Honolulu into like San Francisco, Seattle, and LA and San Diego. But those sort of West Coast gateways, they could probably do some adjustment to those markets to make it palatable. And they got
all right. Looks like we're losing a little bit of the audio there, but we got the gist there. George Ferguson, thanks so much for joining us. George Ferguson, he covers all the airlines and aerospace companies for Bloomberg Intelligence. Again, Alaska Air stock down 16%, and Hawaiian Air up a gajillion %. So one side likes it, the other side doesn't like it. And George was kind of underwhelmed.
I wanted to ask him if he foresees any other mergers happening in the airline space.
We'll get him back.
We'll get him back.
We know where he looks. He's in his spa, at his home spa there.
It does look like a spa in there.
I wanted to ask him, isn't it so cool that Alaska Airlines has the image of Jerry Garcia on their tails?
That's right. That's right.
But I was recently...
It's an Eskimo.
I was recently
an Inuit person.
I was recently informed that was not the case.
But we don't call them Eskimos. They're Inuits.
How long were you thinking that ago?
Up until very recently as an adult, as somebody who should have known better. And I'm in the SeaTac airport, and the pilot says, "No, you numbnuts. It's not Jerry Garcia. It's an Eskimo." And I was like,
why would Jerry Garcia be on the tail?
I thought it was just.
I know.
I thought they were just the coolest airline, because they had Jerry Garcia on their planes.
Put that on the wings.
But that was not the case, apparently. I was shocked and really upset, quite frankly.
I love that. Out of all the things we found out with the emergence of this deal,
Exactly.
that's what I'm going to take away with me, is this.
But I tell you, look at it. Alaska Air stock down 15% on the news, so the shareholders don't like this, it's interesting to see kind of, how much staying power this management team has with this deal to fight this deal. But George was suggesting that he thought it would get approved. But we'll have to check with Jen Reevy from Bloomberg Intelligence, because she's the expert. She's the, the antitrust analyst. And
she is.
They have a different opinion. And quite frankly, when it comes to antitrust, I will follow what she says as well. So
the Biden administration, as we know, have taken an aggressive stance when it comes to some of these airline mergers. So one particular one coming to mind is JetBlue's, as well as this takeover of Spirit. So that was a close to $4 billion cash takeover, but the combined entity would capture more than 50% of Hawaiian's airline market, and that's based on what Alaska said in its investor presentation earlier today.
Yeah, and I've been during my life in some secondary and tertiary, airline markets, and when a competitor comes in, you notice it immediately, and when a competitor leaves, you notice it immediately. So I'm looking at this and I'm just like, it's $4 billion. Who cares? Just let it go through. But I mean, for those people in those markets, there really is antitrust issues, and they see it. You see it in the ticket prices like immediately.
Right.
So, anywho, so we'll see how this plays out. Gets a lot of regulatory review, probably as it should. Markets here still trading lower here with the S&P 500 off 0.9%. NASDAQ off 1.5%. The Russell up 0.3%. So that small cap story continues to play out here. A little bit of outperformance here. Bitcoin up 3.9%, 41,280. So the crypto space really coming alive here. WTI crude oil, we're now below $74 a barrel, down about 0.4% here. And yields obviously moving higher here today. The 10-year Treasury up 9 basis points, 4.28%. We're going to have more coming up. This is Bloomberg. Let's get some company news right now from Lisa Mateo.
Paul, I got to thank you for clearing up that what's on the tail wing of Alaska Air. I flew last month, and I was like, what is that? Okay, thank you. It's not Jerry Garcia. Good morning, guys. A trio of companies there getting ready to join the S&P 500. Bloomberg Isabel Lee, she has more on Uber, global manufacturing company Jabil, and Builders First Source.
Air, Alaska Air, and SolarEdge Technologies upon market open on December 18. I want to hone in on Uber, though. So the stock has rallied year-to-date 132%. Bloomberg Intelligence said that Uber's inclusion in the S&P is a stamp that it is the market leader. The company has also been on a good run. It showed its second straight profitable quarter.
Now, shares of Uber right now, they're higher. They're up about nearly 4%, but we have Jabil, they're down about 1.5%. Builders First Source, they're down nearly 1%. Well, Mark Zuckerberg is selling Meta platform stock for the first time in 2 years after the social media giant rebounded from a difficult 2022. We get more from Bloomberg's Ed Ludlow.
It is the first time that kind of Zuckerberg Inc. has sold Meta shares since November of 2021, though I would kind of say that this is a story about philanthropy and charitable giving. So in total, it's 682,000 shares worth around $185 million, but it's through charitable and political entities rather than him selling himself.
Now, Meta is down about nearly 3% right now. And that hasn't stopped, though, NVIDIA, because it was one of the outperforming, 172% this year through the end of November for Meta, but it outperformed all major U.S. tech companies other than NVIDIA. NVIDIA insiders from unloading their shares after a 220% AI rally. NVIDIA executives and directors last month sold or filed paperwork showing that they...
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Right now, 7 of the 11 major industry groups in the S&P 500 lower right now. Communication services, information technology, they are the laggards. And some of the defensive stocks like healthcare, utilities, consumer staples, They are the leaders right now. Yeah, we're talking about Alaska Air, worst performing stock in the S&P 500. And NVIDIA executives and directors last month sold or filed paperwork showing they intend to sell roughly 370,000 shares worth about $180 million. And those shares, as Lisa mentioned, 3% lower, down 3.2%. Overall, the S&P 500, 43 points lower, down 1%. The Dow Jones Industrial Average, 158 points lower. The NASDAQ 100 down 278 points. This is a decline of 1.75% right now. And we see yields continuing to rise. The 2-year, which is more policy reactive, 10 basis points higher, 464. The 10-year up 8 basis points. That is at 428. It was the end of an era, I guess, for KISS over the weekend. Their final performance in their tour was at Madison Square Garden.
One of my friends went.
One of your...
Yes. Hard to believe.
One of the friends that you married? Minister Madden?
No, not this one.
Anyway, fascinating story. So now they're going to make avatars of KISS, so they will live on as avatars.
Right. Very good.
Wow.
I could care less, actually.
I'm a fan of KISS. They rock.
Are you
back
really?
In my day. Yeah, I mean,
back in the day.
Really?
Did you?
Paul T. Sweeney's a KISS fan?
Paint your
70s.
face?
No, but there was solid 70s, early 80s rock in my formative years for music.
I need to see pictures. We need to dig this up.
No, we
Paul
don't.
Sweeney.
Anyway, that is your... Let's wrap this up. That's your Bloomberg Business Flash.
Thank you, JT. We appreciate it. Bloomberg Markets brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth. Go where you grow. Visit commonwealth.com to learn more. Paul?
All right, very good. Shaheen Contractor joins us here. She is head of ESG research analyst at Bloomberg Intelligence. She is our go-to person, let's be honest, for all things ESG coming out of Bloomberg Intelligence. Which begs the question, why aren't you in Dubai or Doha or wherever this COP28 thing is taking place?
Thank you,
you should be representing us there, not some
maybe
empty
next
suit.
year,
All right, COP28, what is it and where is it and what are the people trying to do there?
So World COP28 is the Conference of Parties on Climate Change. So basically, it's the yearly climate conference of the members of the United Nations. And the goal is basically to meet this, UNFCCC. It's a long acronym, but basically the goal is to limit climate change by having all these countries come together and agree on stuff.
Now, I'm reading your research. Less than a third of the 422 companies in our BI carbon universe aim to cut CO2 emissions by 2030 in line with a 1.5 degrees Celsius scenario. That's not very good.
No, that isn't. And I feel like the latest UNEP report puts us on a trajectory for about 2.8 degrees Celsius, and you can see that sort of show through in our research. It's just a third of companies, the heavy emitters, that are on track to meet this 1.5 degree, let's call it a dream.
Okay.
And if you look at this, so the envoy representing more than 190 nations are gathering for this. So the UN's annual climate change conference, like she was talking about. So what do you expect to be sort of the main topics and what will come out of this?
Sure. So I'll tell you the hope. I can't tell you what is expected.
Right.
But one of the big hopes is to get an agreement on a phase out of fossil fuels. And I say phase out versus a phase down, which kind of almost made it to the ballot last year. And that's, pretty, I guess, debatable since this is in Dubai. We have a lot of oil and gas companies there. So I say that's one of the hopes. The one thing that I'm watching in particular is money into the energy transition, right? And we've talked about some of my research which shows that ESG funds tend to shy away from some industries like cement and steel, which I think are pivotal to the energy transition.
How important of it was it that, or is it that President Biden did not go?
I don't know. I think it varies from year to year. I think, you have many heads of states, many important people over there. I'm just not sure.
Okay, so what, again, is there something we want to see from COP28? Did these happen every year?
Yes.
And why do we call it COP28? What's that mean?
I think it's the 28th time or something like that.
Okay, again, they missed the messaging opportunity there, clearly, because nobody knows what it is. Nobody knows what they're trying to do. I mean, in reality, do companies come there? I guess just as climate change, is it a public-private partnership? Is that how it should work?
So let me describe it. So basically, you have each country sends its delegation, and that delegate's role is to negotiate with different countries to agree on a set standard, right? That's the main part of any COP. On the side, you also have, NGOs, you have companies who sort of, it's almost like a trade show. When I went last year, they had these conferences. There are a lot of deals, a lot of initiatives, a lot of partnerships that are announced at COP. That is the, part of the goal, but the main goal is for countries to agree on something.
Talk to us about climate investing and how that translates into investment returns, because you were talking about earlier the difference if you're looking at aluminum and cement, and when it comes to ESG funds, and not all of them will include them, and so it's interesting seeing the dynamic there.
Yeah, so one of the things we find is that, when you think of climate, a lot of focus goes on clean energy, right? But there's a lot of money to be made on climate in general. And I think one example is we looked at the material industry, so aluminum, cement, steel, and we found that companies with a lower intensity outperformed those with a higher intensity by about 57% over the last 5 years. And there are fundamental reasons behind it. I'll give you an example. So for steel, we have low carbon producers which produce steel using electric arc furnaces, and that's just not susceptible to as much like commodity price spikes and supply chain disruptions as the high emitters.
All right, so give us just kind of the 30,000-foot view of climate change. How are companies in the U.S. thinking about it? Are they committed to it, and how committed are they? And you and I have just answer that one, then I got
sure. So I think over the last 3 years, what we've seen is a number of companies setting climate reduction goals. Right, every year we update this data set that you talked about. We have a whole new set of companies. I think if you try and measure ambition, it's not further enough. That being said, we're starting on this. I don't think you can go from 0 to 100%.
So one of my points I think about climate change and ESG. Until you tie executive compensation to this, it ain't going to happen.
My favorite topic,
my
favorite metric.
Do we have any movement there? What's the discussion around that concept?
Yes, so a lot of the resource-intensive industries, I'll give you the example of Total, I think. They link their climate goals to executive compensation. And you're exactly right. When I think of, which companies are more prepared to meet their goals, not ambition, preparedness, one of the metrics I look at is, do those goals tie into the executive compensation? Good money speaks, right?
Yep.
It's interesting with the data that you've crunched. So your research showing how steel, aluminum, cement companies with the lowest emissions per ton of output in their respective industries have outperformed their peers by 56% over 5 years, yet many ESG funds have overlooked those types of industries. Do you think that will ever change at a certain point?
I think we need to move beyond just looking at carbon intensity and excluding companies based on this. I think once we're able to do that and have ESG more of a fundamental view rather than a sector skew, we'll be able to get past that.
All right, so what are the big themes that you're working on these days, and just in terms of climate change and kind of ESG, and what are you working on?
I think the one that excites me the most is, what is included in ESG funds versus what is missed. I'll give you the example. I'll switch topics to governance maybe, but we find things like shareholder rights or good governance really can impact performance by reducing downside risk, but funds don't include it. There's no correlation between these scores and a company's rate of inclusion in ESG funds. So that's the kind of analysis I'm keen on doing. What's missed?
Do you expect that once this is over, what's next from there? What do you think would be the biggest takeaway out of all of this?
Of COP, you mean?
Mm-hmm.
I think measuring year-to-year progress, that's really the goal of COP. And many people fault it for, not having enough progress year over year. But what I always say is, look how far we've come over the last, couple of years. That's actually what one of the negotiators told me last year.
So is it in Dubai every year?
No, it changes location every year. I think every country has to bid for it.
Where's it next year? Do we know?
The Olympics. I'm not sure. I think maybe Australia.
How come it's never like in Cleveland? You know, I don't get it.
Hawaii.
Yeah, Hawaii could be cool. Shaheen Contractor, ESG Research Analyst of Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. COP28 being the 28th year of this United Nations environmental conference where companies and countries come together and try to solve some of these climate change issues.
190 nations gathering for this.
Yep, not too bad. Looking at the markets here, and everybody would be glad to know that Bloomberg Intelligence is well represented in COP28, so that everybody can sleep a little bit lighter tonight. S&P 500 off 0.9%, the Dow off 0.4%, Nasdaq's taking it on the chin off 1.4%. But again, we'll call out the Russell 2000 up 0.3%, so pretty good there for the small caps. And again, we're keeping an eye on Bitcoin up 4.3%, 41,430. It was up to 42,000 earlier today, so big moves there. Right now, let's head down to Washington, D.C. We'll get world and national news with Immerse.
All right, thank you, Paul. Israel's military is expanding its operations across the Gaza Strip with the expectation of a coming ground invasion of southern Gaza and warnings to many of the territory's 2.2 million residents to evacuate again. More on this with Bloomberg's Oliver Crook.
We remember that the first part of the operation was that ground offensive after pummeling of the northern part of Gaza. That appears to now be expanding to the south, and that is seemingly going to focus around the city of Khan Yunis, where the Israelis say that the Hamas leadership has entrenched themselves. They're inside the tunnels, is what they're saying. They're asking people to evacuate, to go to now what they've set up are safe zones, no target zones, they say.
Bloomberg's Oliver Crook. The White House is warning that aid to Ukraine could run out before the end of this year unless Congress acts. Republicans are insisting any further assistance be tied to tougher border security. Bloomberg government Zach Cohen has the latest on those negotiations.
It's been lumped in with aid for Ukraine, which the White House budget director has indicated really needs to happen by the end of the year in order to continue to support Kyiv in its effort to rebuff the Russian invasion.
Bloomberg government Zach Cohen in Washington, where time is running out on a deal. The Senate is set to leave for Christmas a week from Friday. The deadline for Medicare open enrollment is this Thursday, December 7th. Medicare specialist Kathleen Sarmiento with South Florida's Alliance for Aging says the deadline affects millions of people already enrolled in Medicare.
Every year, these insurance companies that offer the drug coverage and that offer the Advantage plans, they change their prices and their benefits. If somebody does want to change something, you can call 1-800-MEDICARE.
Now, that Medicare hotline is open 24/7, or you can go to Medicare.org. The general enrollment period for original Medicare is January 1st through March 31st each year. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start off with some OPEC news. The Saudi oil minister says OPEC Plus cuts can absolutely go beyond the first quarter. He also said they won't agree on a fossil fuel phase down. Now, initially, those headlines, when they came out just a couple of minutes ago, that sent Brent, the international benchmark, higher. It has since fallen back down to 78.42 a barrel, so that's down about 0.6%. As far as stocks, after 5 weeks of gains, investors are pulling back today. Traders waiting for the data this week, including the jobs report on Friday. And according to Dan Morris at BNP Paribas, none of the possible results will be good for equities.
We get a weak number, and instead of a soft landing, we start worrying about a recession, then equities aren't going to look so good. If conversely it's a very strong number, then at least some of this rally in real rates has got to come out, and that's going to hurt as well.
Twilio is going to cut 5% of its workforce, and the third major headcount reduction there. Then you also have Spotify Technology announcing a third round of layoffs, cutting nearly 1/5 of its workforce. And right now, S&P 500, 40 points lower. That's down 0.9%, 45.54 on the index. The Dow, 167 points lower. The NASDAQ 100 down 245 points. That is a decline of 1.5%. And just a poll, toy sales down 8% this year compared with 2022. But you know what? Bucking the trend, at least according to the research cited by the Wall Street Journal, plush toys enjoying a soft landing of 4% for the year. This according to the market research firm Circana. Plush toy sales growing to $1.7 billion in October from $846 million in October of last year.
Plush.
By this they mean
like Beanie Babies, little.
Yeah, teddy bears. Covers the all stuffed toys.
Oh, I love that.
Stuffed animals.
There you go.
Why not?
Yeah.
All
Go
right.
figure.
Teddy
John
bears.
Tucker, thank you so much. We appreciate that as always. That's news you can use, folks. Plush toys.
Plush
update.
toys, teddy bears.
That's right. Jess Met and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. So check us out over there on Bloomberg Radio. Let's talk ETFs, because that's where all the money is going. Johan Brenn joins us. Johan is a VP and head of ETF strategy at this little firm called Allianz Investment Management. Johan, thanks so much for joining us. I mean, I think all you ETF people think you were smart. I just think you're in the right spot at the right time. I mean, the money is just flying to ETFs. Talk to us about how you guys at Allianz think about this business and kind of the future of this business.
Yeah, sure. Yeah, thanks again for having me. It's always a pleasure. First of all, so yeah, it is a big flow. It is a bit of a tidal wave, as you point out, and it's no secret. You know, it's at the expense of some other sectors in the industry. But there are good reasons for it, you know, and those are the good reasons that are not going to go away anytime soon, as far as we know. You know, it is a very efficient wrapper, and the evolution inside of that wrapper has been enabled by some regulatory changes that will allow for much more interesting types of investment strategies to come to market. So yeah, this is it's definitely a long-term play on our side.
Walk us through the flows this year as we get into year end. Where is the money going and where is the money coming out of?
Yeah, it's interesting. I was just looking this morning, actually, and one of the things that caught my eye is that we've seen some rotation from NASDAQ-oriented ETFs, frankly. We don't have our own NASDAQ ETFs, but, you know, looking at those flows, you can see that there's a very different positioning now than just like, you know, call it, 6 months ago when you saw a lot more money flowing into tech-heavy industries. Now we're seeing the reverse and actually more money betting on an outflows, or I'm sorry, not outflows, but negative, so short selling on the Qs. So that's kind of interesting just off the top. And then, of course, we see some of the rotation between the short duration fixed income and the longer duration fixed income funds as well. And then the industry that we are keenly focused on, of course, is the defined outcome ETF space, or the structured ETF space, the buffered ETF space, whatever you want to call it, where we've seen back-to-back years now with almost 10 billion each coming into that space alone.
So define what that is, the defined structure ETF. Give me some examples.
Yeah, so the quick example is that you get exposure to the S&P 500 in the case of our ETFs, and you get exposure up to a cap. So you can only make X number of percentage points over up to a 12-month outcome period. So what you're giving up is that the maximum upside, if you will. So you're buying these types of ETFs because you're looking for downside risk mitigation. So the beauty in these products is that they come with either a 10% buffer against market drops or a 20% buffer against market drops. So that's kind of the quick trade-off. If you want to focus on not losing money on the downside, you have to give something up, and that's called the upside in very simple terms.
What are you seeing in the small and mid-cap space?
So in the small and mid-cap space, it's part of an asset allocation for most investors, and that's been a pretty steady holding. I don't get into the exact rotations between mid-cap and small cap in this case, but we try to tend to focus on the more balanced portfolio where investors have broad-based exposure, where those two allocations tend to have a pretty static allocation.
So one of the Bitcoin categories that is getting a lot of attention is on the ETF side is Bitcoin. What do you guys think is going to happen there?
Well, assuming the regulations pass, then it's a very easy liquid way to access Bitcoin and presumably.
Do you think the regulators will pass it?
I don't have a good insight to specifically what the regulators will do and will not do, but it seems to make sense. It seems to make common sense to have a regulation overlay on something that feels a little bit slippery, perhaps, the way it's been trading now. So if you can actually get it regulated, it's probably good for the market in the long term.
Something I'm curious about is we've talked so much about money market funds this year, especially off of the low of October of last year and over $1 trillion flowing into that. At what point are you seeing potentially money coming out of that and then flowing more toward ETFs as we go into year end?
Yeah, it's interesting because you look at money markets and you look at the very short duration fixed income holdings, call them all very similar at this point with the Fed rate anchored where it is. Let's say you can get 5% out of your fund or your cash position today. You still have inflation that will chew up part of that, and it's still income, so you have to pay taxes on it. And at the end of the day, you're kind of preserving your capital, but not a whole lot more than that. So it looks interesting on paper at first brush, but again, you take out those components of taxes and inflation, and it's kind of boring, frankly, at that point. So once the realization sets in, you can hold on to that, the more of the belly of the curve, if you will, the longer term type of fixed income portfolios. Probably see some shift to those areas out the curve eventually. But in the meantime, you also have investors coming back to the equity risk premium, and you can very easily access that in the ETF space. And of course, you can access, cash-like ETFs as well. So you don't really have to sit on cash. You can access that through an ETF if you'd like to.
Hey, Johan, give us a sense of kind of the market structure here for ETFs. What percentage is kind of retail investors versus institutional from your perspective?
Well, it tends to be like the institutional took a while, right? I still remember working on the institutional side many years ago, and the ETFs were kind of a afterthought in many cases, and it started bubbling up, call it maybe 15 years ago, give or take, and it became more of a placeholder in the institutional portfolios. So the use case for institutions is still there, but it tends to be more on the passive side for the time being, and where you see the growth in the ETF space is clearly on the active side. Now, the passive side is for sure dominating with over 90% of the assets in the passive space, and the institutional dollars and assets are being traded in the ETF space. That's continues to dominate that, right? But once you layer in more types of strategies, active funds, and you have now, we're talking about the Bitcoin ETF, for example, you have structured products like the ones we have, buffered ETFs and so on and so forth. The plethora of the menu and the selection is just endless. So in terms of driving assets across both institutional and retail, it's probably going to come from both places.
All right, Johan, thank you so much for taking the time. Always appreciate getting your thoughts and insight here on the ETF space. Johan Gran, he is the VP and head of ETF strategy at Allianz Investment Management. Again, just one of the amazing growth stories in financial services over the last 15 years, I would say, probably.
Especially when you're looking at this ETF space and what that's telling us. And interesting what he was talking about when it comes to technology flows and what that's showing right now with some investors shorting it.
Right. And, of course, Bloomberg has that part of the market covered. ETF Go. Gives you everything you need to know in that space. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Hey there, Paul. Richard Branson tells the Financial Times that he doesn't plan further investments in the company that he founded. Bloomberg's Simone Foxman says the news has shares falling the most since June.
Richard Branson telling the FT that we don't have the deepest pockets since COVID. The Virgin Galactic has about $1 billion or nearly, and therefore it should have sufficient funds to do the job on its own. But last month, the company worked to save about $25 million by cutting 18% of its workforce, discontinuing commercial flights for 18 months, and then also all of this trying to funnel money into its new Delta spaceplane.
Virgin Galactic right now down about 15%. Europe's biggest car rental company is phasing out Teslas from its fleet. Bloomberg's Gina Cervetti has that story.
The car companies make money by selling their vehicles when they're finished with them, but now Sixt says it's no longer worth having Teslas in its fleet. The company is phasing out those electric cars after Tesla's heavy price cuts hurt their resale value.
Tesla right now down nearly 1%. And Sixt also says higher repair costs after a crash. Well, that's another issue. CCC Intelligent Solutions, it says that last year, repairing an EV after an accident cost an average of just over $6,500, while all other vehicles cost just over $4,200. Now, the Wall Street Journal says fixes tend to need more replacement parts. Fewer people know how to do the repair, so you're going to have to wait longer for your vehicle too. And on top of that, those higher repair costs, well, they're driving up insurance premiums for electric owners. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, the sell-off in the market continues here. The S&P 500 off 0.7%, NASDAQ off 1.2%. But again, we're calling out the Russell up about 0.6%. So the small cappers continuing to outperform here, which I think is good. So say the technical folks out there. The 10-year Treasury is off up 9 basis points, 4.28% on your 10-year Treasury. WTI crude oil a little bit lower here, just below, or just about $73 per barrel there. Gold, it is down 2.4%. Had a wild swing here of about 5% top to bottom here over the last 18 hours or so. Now down 2.4%, $2,021 per ounce there. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Morris.
All right, thank you, Paul. The U.S. and other allies are urging Israel to limit civilian casualties ahead of a likely ground invasion of southern Gaza. But that's the area where Israel had told hundreds of thousands of civilians to evacuate during the first phase of the war. Bloomberg's Anne-Marie Hordern tells us she talked about this with White House National Security spokesman John Kirby.
I asked Admiral Kirby, where do they go? And his answers were that they told Israel that they do not support southern operations unless they factored in all the civilians. And then his second point is that they urged yet again to think about how to make sure civilians are safe and pursue operations that account for civilians.
Bloomberg's Anne-Marie Hordern in Washington. A former American diplomat has been charged with serving as a secret agent for Cuban intelligence, dating back decades. The Justice Department says the former U.S. ambassador to Bolivia, Manuel Roca, has been engaged in clandestine activity on Cuba's behalf for decades, including by meeting with Cuban intelligence operatives. He's supposed to be in court later today. North Dakota Governor Doug Burgum is suspending his presidential campaign, ending a long-shot bid for the Republican nomination that outlasted some bigger-name rivals. Burgum ran an issues-driven campaign focused on energy independence, technological innovation, and national security. He raised money for his campaign by giving away $20 gift cards in exchange for contributions of as little as $1. Time magazine has revealed the short list for its 2023 Person of the Year. 9 candidates are on the short list, including Taylor Swift, Hollywood strikers, Chinese President Xi Jinping, King Charles III, the Barbie movie, Vladimir Putin, Trump prosecutors Sam Altman, and Fed Chair Jay Powell. One of those will be Time's 2023 Person of the Year. They'll announce it December 6th. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Jess.
All right, Amy Morris, thank you so much. We appreciate it. Too bad Matt Miller's not here. I mean, Bitcoin's having the story here.
It is.
Today and this year, it's up another 4.8% today, 41,600. It's up about 150% year to date. And it's, smaller tokens as well, such as Ether and meme crowd favorite Dogecoin also pushed higher. Bitcoin Cash jumped 8%, and a gauge of the largest 100 crypto coins added more than 3.3%. The broader cryptocurrency advance came even as stock markets were mixed, with the benchmarks in the U.S., China, and Hong Kong sliding. I don't really know, other than investors are increasingly convinced that the Fed is going to cut rates, I guess.
Looking at also crypto-linked stocks, Paul. So Riot Platforms, RIOT, ticker symbol on that, up 8% this morning. Also looking at Coinbase, COIN is the ticker symbol on that, up over 6%. So not just the coins, but also lifting those crypto-exposed stocks, Paul.
What does RIS mean?
Oh, this is something the New York Times put out a story. So talking about Oxford's 2023 word of the year. So that is Riz. Apparently, this is a Gen Z slang term derived from charisma. So apparently it went viral this year after actor Tom Holland claimed to have none. But this is actually the first time that I've heard about it.
So it's derived from charisma. So you're just saying, the kids are saying Riz.
That's what the kids apparently are, the Gen Z. I'm not Gen Z, so.
What are you?
Millennial. Of course, yes.
Okay.
Yes. No, not the Gen Z.
So Gen Z is younger.
Yes.
Okay, got it.
But the kids are apparently saying the Riz now.
I wonder what Lisa Mateo is. I wonder what she is behind the wall. Think any group claims Lisa Mateo? I don't know what to say.
We love her.
All right, more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to follow up our discussion on what's happening in the world of crypto. We do that with Mike McGlone, Senior Commodity Strategist with Bloomberg Intelligence.
Miami Mike.
Again, Miami Mike, and still, to my mind, the go-to voice on all that crypto stuff. And then a real treat here today, Chris Ailman. He's the Chief Investment Officer of the California State Teachers Retirement System. They have a couple of shekels under management. He's going to be in studio giving us his market call. I mean, they've got a gajillion in assets under management for all the teachers and cops and all that kind of stuff. So we'll get him in studio, figure out what they're doing with their portfolio. And we'll kick things off in this noon hour, as we do with Mr. Charlie Pellet.
Hi, thank you very much. And here's what's going on. We got losses to start the new trading week. The Dow, the S&P, NASDAQ, all in the red right now. Wall Street kicking off the week with a move lower. Both stocks and bonds are down in a signal that traders' aggressive pricing of interest rate cuts by the Fed may have gone too far. So today we've got the bulls stumbling with the S&P down 33 to 45.61, a drop right now of about 0.7%. Dow Industrials down 138, drop there of 0.4%. The NASDAQ Composite Index is down 160, a decline of about 1.2%. Spot gold right now is little change. We do have the S&P 500 index, as I mentioned, lower by 0.8%. And West Texas Intermediate crude down 0.8%, 75.52 for a barrel of WTI. Cannot ignore Bitcoin today. Right now, it is up 4.7%, 41,575 on Bitcoin. It was trading above 42,000 earlier today. Some of the rally attributed to hopes for a Bitcoin ETF. Johan Grant is head of business development at Allianz Investment Management. And moments ago here on Bloomberg Markets, he told us regulation for a Bitcoin ETF does make sense.
I don't have a good insight to specifically what the regulators will do and will not do, but it seems to make sense. It seems to make common sense to have a regulation overlay on something that feels a little bit slippery, perhaps, the way it's been trading now. So if you can actually get it regulated, it's probably good for the market in the long term.
And you can hear more of that conversation right here on our podcast. We do have Bitcoin again up by about 4.7%. Hawaiian Holdings surging after the airline agreed to be acquired by Alaska Air Group for $1.9 billion in cash and debt. Hawaiian shares, they are surging 187%. Alaska shares down by 15.6%. So again, recapping, stocks are lower. S&P down 33, drop there of 0.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Paul, a star has entered the Bloomberg Interactive Brokers studio. Nice. Elena Popino, one of our great reporters on our equities team who I get the pleasure of sitting next to every day. I know how bullish you are about in office, and Elena is always here. She's my partner in crime whenever we do all of our weekend stories together that you and Matt Miller talk about. But underneath the hood, what's happening from an individual stock level today, Elena?
So a lot of cross currents actually today. Alaska Air is down 19%, ticker ALK. You know, investors are questioning that deal with Hawaiian Holdings. You know, it's a cash and debt deal, so there is going to be a ton of uncertainty on the balance sheet front. So whether the company is going to be able to pull it off is a big question. Marathon Digital, a cryptocurrency linked stock, ticker MARA, is up 9%. It's one of the most heavily shorted stocks in the Russell 2000.
Heavily shorted.
Yes. Okay. Right. So as you know, risk sentiment is increasing in Bitcoin-related stocks. So is the rally in stocks like Marathon. So it remains to be seen how long it's going to last. But with Bitcoin above 40,000, solidly above 40,000 today, that's that's a net positive for all of the peers. And then Royal Caribbean, ticker RCL, is up 3% after a Wells Fargo analyst walked out of the meeting with the management over the weekend, saying he's so positive about holiday sales, about forward-looking guidance, and about the company being on track to pay down its debt.
Wow.
Are you a cruiser? Have you been on a cruise ship?
Never in my life.
No. And you?
No.
Man, we're 0 for 3 in the studio. But we have to get Charlie Pellet back in because he's the cruise director.
Oh, really?
But there has been a lot of pent-up demand after the pandemic, with people wanting to spend more on, vacations, go in places, and, Royal Caribbean, some of its other peers have been saying that the demand is strong despite inflation, despite all the uncertainty about the state of the economy. People just want to go on vacation and spend money there.
So,
go ahead.
No, go ahead.
I was just going to say, I mean, it's the cruise, the people that I know that cruise are passionate about it. And are
I feel like
loyal
it's
to
polarizing. You either cruise or you don't.
I think, but one of the things I remember, the cruise, like literally the first days of the pandemic, the cruise companies coming to market and issuing debt, just throwing cash on their balance sheet because they didn't, I think they were like, we don't know like anybody else how this is going to play out, much less take a couple of years. But they just said, we know it's not good for our business and we need the cash. And that was, I think, always think about, those were some smart CFOs back in the day.
Elena is really great at crunching all sorts of data for us when it comes to positioning and hedging, but she also noticed about sort of the tame moves we've seen toward the tail end of last month. Talk to us about that and what that means going forward the next couple of weeks into year end.
So we had an amazing rally in the first part of November, and then the rally kind of came to a halt in the second part. And last week was the third quietest week for the S&P 500 this year. Huh. Yes, even though there was a bit of a rally, under the hood, it was a 0.2% swing in either direction on average for the S&P 500 last week. What that tells me is that there is some optimism that it's not becoming a euphoria. It's a rally that has been quite excessive last month, but traders are pausing to assess where things stand. And clearly today you see that we are on the downside across the board, but whether it's going to be long-lived or not is an open question. But the fact that the rally isn't gaining that euphoric sense to it is a positive. Because
consolidating.
Right, yeah, because it means that there is some health beneath this momentum, which means that the rally longer term can continue.
I know you're looking at small caps, too.
Yeah, small caps. It's interesting that small caps are actually up today, despite the S&P being down 1% or more. And it doesn't happen very often. It happened once in October, and the second time when it happened was in 2021. So usually where the S&P goes, so does small caps, but not today. Yeah.
Interesting.
Yeah.
A break there.
Yeah, exactly. We've been talking about the Russell doing better over the last week or two, it seemed like, and maybe that was good news for the breadth of the market, the fundamentals of the market.
Yeah, a bit of a rotation going on here.
Nice.
All right, Elena, thank you so much. We appreciate that. Bloomberg equities reporter Elena Popina joining us here in our Bloomberg studio in Midtown Manhattan. Down in Miami, however, is the real brain trust of this Bloomberg
Miami Mike
thing. It's right. Mike McGlone covers all the commodity stuff for us for Bloomberg Intelligence. And Mike, we're seeing this big move here in Bitcoin. What's going on out there?
I'd like to say more buyers, but it looks like at this stage it's a little more speculative because it's all anticipation of the ETF, which Bloomberg Intelligence expects probably going to get approved at the beginning of January, so maybe a month away from that. But what's significant for me really today is gold was the story overnight, and it's come off all-time new highs, and the digital gold is still showing more strength. I'm very impressed with that despite the stock market weakness. So it's showing the divergent strength. It's showing what a lot of people said it was supposed to be doing. I just need to see the beef. I need to see the proof that is like an alternative asset that will be offsetting things like higher deficits and actually be negatively correlated to the stock market. But so far today it's doing quite well. It's just most people point out this 42,000 levels, very good resistance.
You wrote a note that's in the terminal this morning about how gold may have the upper hand versus Bitcoin next year, but based on a caveat. Walk us through what you're finding.
Well, I'm glad you mentioned that, Jess, because the minute I hit the tape, it's showing the opposite this morning. But
that's how it goes.
Yeah, exactly. But it's obviously, but it's something I've been focused on for quite a while. If you look at the price of Bitcoin divided by gold, it has an increase and a strong connection to the S&P 500. I mean, that's kind of a risk measure. And Bitcoin has a much higher volatility. It's digital gold, so when the stock market goes up, it goes up more. The stock market goes down, it goes down more. But what I'm pointing out is if we do get the normal recession, if we do get the typical correction in the stock market, Bitcoin should suffer, but it's showing the opposite today, which is very impressive so far. I'm just not ready to say that this highly volatile asset is going to trade more like a low volatile risk-off asset like gold.
So what do you need to see changes into, because you're looking at a lot of different things, whether you're looking at Bitcoin, other, say, metals like gold, also commodities too. What do you need to see happen in order for you to become more optimistic about the trajectory of the economy in 2024?
From a commodity standpoint, you need to, number one, see demand pull sources in industrial metals and energy. And it's the exact opposite. So if you want to tilt a little to the signals from commodities, they're very global recessionary. Industrial metals down, energy down, grains down, and the best major performing commodity on the planet this year, gold, is a very recessionary trajectory. And it really fits into what's happening in China, the recession that's tilting over in Europe, and Bloomberg Economics and leading economics leading indicators view for U.S. recession next year. So you want to see industrial metals do better, but typically also it's just the worst stage of the cycle. Typically, we're in the higher price cure stage of the cycle. Prices were really high last year, and they're coming back. They typically get cheap. And also in the wrong stage of Fed easing. Fed easing started easing, and we're just starting to see the trickle-down effects in the economy. That's why it's really unique that Bitcoin's going up. It's a risk asset, but I look at it for next year. I'm still quite bullish gold and need to see some signs of bottoming and recovery in industrial metals and energy. I still don't see that.
What did we see with gold overnight in Asia? What was going on there?
It's a good question, Paul. The high, according to our metric on Bloomberg, is $2,135 an ounce. I looked at it last night about 7. I'm like, I have never seen a Sunday night where gold was out to 2 to 3%. So I think a lot of that, Paul, is what you see in gold. Gold is a highly traded speculative asset, and people have been knocking around forever. It's also a store of value. That's what makes it liquid. So I think what we did is just flush some of the shorts near the highs, and now what we're doing is bouncing around, see if we can hold that 2,000 level of support, which I think it will. It's been frustrating people since 2000 when it was resistance. It's been holding resistance. I think it's about that transition from 2000 resistance to 2000 support. But last night, the trading, I don't know the specifics, but typically from an ex-futures trader guy, that's some unfortunate shorts that got stopped out.
Talk to us about the Conference Board's leading indicators index and how that relates to gold, because it seems like, especially on the consumer side of things, a lot of that data has continued to hold up. But I know you're looking at other pockets, because from a stock investor's point of view, usually they look at the leading indicators index more as a lagging indicator index. But how are you viewing that when it comes to gold?
Well, I do love the leading indicators that act as a lagging indicator. But, and so right now it's minus 7.6%. And we've never had since 1960, minus 7.6% in leading indicators for U.S. without a recession. And a key thing I like to rope in is when you have recessions, usually the stock market goes down. But here's the metric that really matters, is if you look at the price of gold relative to the S&P 500, the per ounce price of gold relative to the S&P 500, gold's at a significant discount. And every time we get leading indicators this low in a recession, gold just catches up when it's at a discount. So this is really bullish for gold, bad for the stock market. Maybe it'll be different this time, but I stick with the lessons of history in relative value. Basically, gold's at less than half the price of the S&P 500, and I'm just afraid it's going to catch up and go 1-to-1.
So, are you still on your bullish gold call?
Oh, sure, absolutely. This is just part of the nuances of it, Paul. It's going to drive people crazy, but I don't see what stops it at this juncture. I mean, the key thing is also we had that little flush back there in October at the bottom, just above 1,800 an ounce. That just flushed out the week longs. Maybe today we just flushed out some of the week shorts, but overall, the trajectory for gold is quite bullish. The deepest pockets on the planet are buying, central banks. ETF holdings have been selling off, but I think that's going to flip. And it's a significant alternative, particularly if we get that long overdue correction. I should say bear market. We haven't had a real bear market in the stock market since that bottom in 2009.
Okay, what stops gold from outperforming other base metals?
There's a key question. Typically, you need organic demand pull recovery on a global basis. Number one, China. China's probably not going to happen. Remember, their property crisis is a big issue, and their best export customers, U.S. and Europe, are both heading towards recession. So that's not happening. And also, the bottom line is you look at monetary policy, typically takes a long lag from central bank easing, and we haven't even started that. So that's what I'm looking forward to. Economics all turning bad. We haven't even started the easing process. Typically, basically the Bloomberg Commodity Index bottoms almost 2 years after the first Federal Reserve ease, if you look at the last 20 or 30 years as an example.
Nat gas, let's switch gears. Why is that down 40-some-odd% this year? Is it just weather or supply?
The main thing about nat gas is it was pumped so much last year, Paul, up to 10, now around between 2 and 3. It was just the pump was too big last year. It brought on that supply and it squashed demand. So the U.S. is now the world's largest nat gas producer, net exporter of liquefied natural gas. And what happened last year should lock it into a range for who knows how long, between basically 2 and 4, because that's what it always does. But the key thing I like to point about nat gas is one of the most significant indicators of deflationary forces from commodities. The price you saw this year around 2 was first traded in 1990. And the main reason it pumped was the war, and it's gone back down. So, okay, now there's different nuances, but if you said that in the stock market, which some other stock markets in the world can say that, you would say deflation. So that's what I like to say about nat gas is we have a wonderful situation in this country. We can create more of it. We actually use less of it. Now we're exporting a lot, and it's really helping Europe.
You wrote also about how commodities showing deflation, but then when you're looking at stocks, a little bit of a different story there. What do you think is the most important component as far as, like, if what you're viewing it now at this point, and then stock investors are looking at least 12 months out, I mean, what should we really be looking to? What are things signaling in 2025?
The high risks of a serious deflationary spiral if the stock market just has a little decline. So right now, let's look at PPI year over year. It's down 0.4%. The low this year is minus 3.1%. That's much more deflationary than 2008 and 9. So I look at it, unless the stock market can keep rising the tide for all boats, if it just tilts down a little, that's severe deflation kicking in. And you already seen it in commodities, most notably with industrial metals, precious metals, grains. And the bottom line is the base was so high. I mean, we got crude oil up to $130 a barrel last year. Now it's 75. The average cost of production in this country is closer to 55. So there's still a lot of room for commodities to get cheap and for assets to go down after that big pump and liquidity we had to the peak in 2022.
All right, Mike, as always, we appreciate getting a few minutes of your time. Mike McGlone, he is the senior macro strategist, Bloomberg Intelligence. He is our foothold go-to anchor in South Florida. He's our guy down there, so we'll have to go down there. Maybe we'll go down there and see him this winter, Jeff.
We should.
Just go down there and see him. Yeah,
it's
that'd be fun.
Too cold here. So.
Yeah, I'll make a phone call here, see if we can get something done. So that's Mike McGlone, senior macro strategist, Bloomberg Intelligence. Markets continue to be in the red here. The S&P off 0.6%. Nasdaq off 1%. But again, we're calling out the small cap. Russell 2000 up 0.7%. So a nice divergence there. The small caps performing a little bit better here over the last couple of weeks. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. The weight loss drugs craze is sparking deal-making in big pharma. Swiss drug maker Roche is paying $3.1 billion for Karma Therapeutics, a company with 3 weight loss drugs that are in the pipeline right now. Bloomberg's Eric Fanner has more on the rising competition in the obesity drug space.
In recent weeks, we've seen AstraZeneca get into the act. We've already had Pfizer. They're developing a pill. Of course, the big players are Novo Nordisk and Eli Lilly, which has followed it with another drug. So you've got at least 4 big ones. Others surely pondering it. I mean, it's just everybody's going for this obesity market.
Roche right now up nearly 3%. Spotify cutting jobs again, this time by another 17% or about 1,500 workers. Bloomberg's Agji Cantrill says it's part of a longer-term strategy for the company.
This is a company that has sunk billions into trying to diversify its business by also pivoting towards podcasts as well as their typical music offerings. And on top of that, they also need to commit huge amounts of financing all the time to the licensing of that music, to the music license holders. And so that's a critical part of the business.
Spotify up more than 8.5%. And from music streaming to movies and TV, Verizon customers, they'll be able to save more than 40% each month on Netflix and Max streaming. Now, you have to be a member of Verizon's My Plan, and then you'll be able to get ad-supported versions from the two entertainment giants for a bundle for just under $10 a month. That starts on Thursday. Right now, we have Verizon is a bit lower, Netflix too, as well as Warner Brothers Discovery. Those are the company stories we're following this hour. I'm Lisa Mateo.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a headline from the Bloomberg Professional Service. Cutter Holdings selling about 362 million shares in Barclays. It is a down Monday for stocks. The Dow, the S&P, NASDAQ, all declining. S&P down 31 right now, drop of 0.7%. Dow Industrials down 114, a decline now of 0.3%. NASDAQ lower by 1.1%, down 151 points. We've got the 10-year yielding 4.28% with a 2-year at 4.65%. Spot gold down 2.2%. $2,027 the ounce on gold. Bitcoin, big story, was trading about $42,000 earlier today. Right now, it does remain higher by 4.7%. Bitcoin at $41,583. West Texas Intermediate crude down 1%, $73.36 a barrel on WTI. Meta platform shares down 1.8%. Mark Zuckerberg is selling Meta stock for the first time in 2 years after the social media giant rapidly rebounded from a tumultuous 2022. Again, recapping, U.S. stocks are trading lower after a rally last week. S&P today down now by about 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate it. Jess Metton and Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Global Radio. Well, as Jess and I have been talking about, a big story in the stock market, in the economy in 2023 has been AI. It came out of nowhere. And now every company talks about it. I don't care what business they're in. They think
Kroger
it's going to
mentions it.
Transform, disrupt our industry. I don't know. But there are legal issues associated with this, which I think we're just starting to get our arms around. And that includes an area of in marketing and advertising. So that's a big issue. The question is it a slippery slope or a good idea? The person who has the answer to that question is Rania Sedholm. She's a managing partner at Sedholm Law Group. So Rania, when I think about, I'm just reading your stuff here, only something, this is according to the U.S. Copyright Office, only something generated by a person can be copyrighted, and AI is not a person under copyright or patent law. So if AI is used to come up with an advertising campaign, a marketing campaign, who owns it? And aren't they using maybe stuff that was created by a human that's protected by copyright? How's all that work?
Yeah, it's complicated. It is only protected if it's written by a human being, and the application will denote who owns it. Typically, they'll put a company name anyway. We may never know whether it was written by AI. But some things that can happen is that as AI is learning, whatever that means, it may be overly inspired by something that was written by somebody else, and that's a landmine. Also, the voice of the person may change slightly, and the messaging may not be exactly what you want, right? We're emotional creatures as humans, and marketing just hits that nail right on the head. I'm not sure if AI has honed in on our feelings just yet.
What are some examples of some companies that may have run up against some legal issues here when it comes to AI and marketing?
Well, I think we spoke previously a little bit about Sarah Silverman saying that whatever they're doing with her book is copyright infringement because AI is learning her book and other people's books, of course, and then they're going to market something as a result. We don't know what it is yet, but she recently found herself in a setback in court, and the court said that she did not prove her case and she didn't allege the facts needed to proceed. So I think everyone is still having this huge learning curve, and we all need to study hard to figure out where our options lie.
What you use in your note here, you just had as an example of where this could be, is that these machines go out and start aggregating information. They may go out and, if they're looking for an advertising tagline, nothing gets between me and my Calvins, which was just an iconic campaign starring Brooke Shields.
Yes. I'm aging myself with that example.
Back in the day, that was it worked because that's all people talked about for a very long time about this product. But let's say a machine goes out there and grabs that.
Yes.
And somehow that gets incorporated into a marketing campaign. Somebody owns that copyright to "Nothing Gets Between Me and My Calvins." I don't know if it's Calvin Klein or the ad agency or whatever. But somebody's got to do the homework on that.
Yes, it is very important if you're going to use machines to help you that you have to check the machine's work. You can't just accept whatever it is generated.
Do you think that's happening?
Not really. I think that AI is making a lot of things easier and streamlining a lot of processes. And again, we like that, right, as people. I mean, look what happened with computers. Everybody was against them. Oh, my goodness. Y2K, we're all going to die. I think that happened, and it was wrong. So we love things that are convenient.
What industries are using AI in marketing the most right now?
I think all industries are using them across the board, and we just don't know it. I think that, they take aggregated information. For example, a hospital, right? How many... I don't know, how many people are going to that hospital for some kind of sports injury? Well, they're going to start marketing about sports injury because it's difficult for one person to sit there and examine each and every commercial, each and every posted ad, everything. But a machine can do it lickety-split.
All right, so AI was once again in the forefront of some of the Hollywood strike issues between the writers in the studios and the actors in the studios. And I guess there's new language in those agreements. And what language was incorporated in there to kind of give protection vis-a-vis AI?
Well, I think that they're both winners and losers with the provisions that are in their contract now. So one thing that's a win for the actors is that if you use AI to create a fake Rania, for example, I still get paid, even though I may not have worked on it, because you're using my likeness. Everyone thinks it's me, so I'm going to get paid. That's certainly a win. However, the producers are permitted to create synthetic characters that may not look like anyone you recognize, and no one gets paid for that. They can also make a double of me and use it for satire. So think of, I'm going to date myself again, Weird Al Yankovic, right? What he was doing, like a surgeon or whatever. So you can use it for parody. You can use a double of me or anyone else for parody, and you can use it for some kind of biographical data. And the actors won't get paid for that. So there are some winners, but there are also some losers, and there's a wide availability of new characters out there. If we've ever wanted to figure out what a baby would look like if it had two parents that we both think are pretty. We can create this image in AI.
Moving forward, how much of an issue is this going to be, especially for marketing, if AI still has a lot of question marks surrounding it and how it's going to be used by companies?
Well, I think to protect yourself as a company, I mean, that's who I'm usually working with as the company, I tell them to have review rights in all their contracts. So before the agency just posts your advertisement, check it. Make sure it sounds like you, or if it doesn't, you like the new sound, and make sure that whatever is stated is factual, because there's sales puffery and then there's misrepresentation, and it's a very fine line.
And then the Hollywood strikes, as far as what that means for potential jobs. Talk to us about that.
Well, I think what can happen, what I do see happening, is if some stars either want to make too much, whatever that means, or they have attitudes that the producers or directors don't like, they'll just create a synthetic character that doesn't look like them or anyone else, and then they just pluck them out.
All right, let's switch gears. Let's talk another New York-specific issue, which is non-compete agreements, which are in financial services industry here in New York and the legal industry in New York, lots of them really prevalent. What's the status of non-competes in New York?
Well, Kathy Hochul just last week rejected the bill as given to her.
And this was a bill to?
This was a bill that says all non-competes in New York will be prohibited. Okay. And she said, no, that's not going to help businesses out. And she has until December 31st of this year to redline it. Maybe she's going to add some limitations to it. One limitation I've been listening to is if someone is making more than $250,000, you can enforce a non-compete. Otherwise, maybe not. So we're going to wait and see the power of the pen and how she uses it until the end of the year.
How important is this to, what's the business community in New York saying?
Well, everyone is frightened. I mean, think about it. If I purchase your company and then tomorrow you can open up another company and tell all your previous customers who I just thought were going to be my customers that you're doing the same thing under a new name.
So who's backing the passage of this? Just labor groups?
Yes.
Okay. So this is a question this is kind of a new issue, but it's just you're either pro-business or you're pro-labor. It's at its basic fundamental level, I guess?
Well, I think that's what we're seeing across the United States. Either you're for or against something, and the world is very nuanced, and it's a difficult position to be in, to always just say yes or no.
So, again, we'll hear from Governor Hochul by the end of December. Is that the plan?
Maybe. If she does not make any changes, then it'll just disappear. However, President Biden has something similar in the works on a federal basis, so it may be irrelevant soon.
Interesting. Okay. Lots out there. That's why we talk to people like you. Rania Sedholm, she's a managing partner, Sedholm Law Group, talking about AI and its impact on a lot of businesses, including marketing and advertising and all that kind of stuff. And then just more broadly, on the employment front, just non-competes. It seems like non-competes have been around forever.
They have been, especially in financial services.
Yeah, exactly. Garden leave. I mean, how many people have taken up a new skill just by playing with their garden leave a little bit. S&P 500 off 0.6% here in the market. So we got a little bit of sell-off, but that was after, I guess, 5 weeks of big-time performance. Right now, let's head down to Washington, D.C. We'll get world and national news with Nancy Lyons.
Thanks, Paul. Israel is widening its war with Hamas, now moving its military operations into southern Gaza. Bloomberg's Ethan Bronner is in Tel Aviv and says other countries are expressing concerns over the protection of civilians in the south.
It's a very difficult situation on the ground for the people who live there. Many of them left the north at the request of the Israelis and then moved to the south and now are being asked to move again. These are not people with an enormous amount of wealth. There are large families across many generations, and risk to civilians is very high.
Bloomberg's Ethan Bronner again reporting from Tel Aviv. Over the weekend, American officials from Secretary of Defense Lloyd Austin to Vice President Kamala Harris said the civilian cost of the war is getting too high. The U.S. Air Force says the wreckage of a military aircraft has been found off the coast of Japan. The search team found the Osprey aircraft that crashed during a training exercise last week, as well as the bodies of 5 missing crew members. So far, none of the remains have been identified. The Supreme Court heard arguments today over whether the Sackler family, which used to control Purdue Pharma, should be immune from future lawsuits linked to the opioid crisis. At issue is whether the legal shield that bankruptcy provides can be extended to the Sacklers, a billionaire family who has not decided or declared bankruptcy themselves. As part of the bankruptcy deal, the Sacklers agreed to pay $6 billion to fund opioid treatment, and Purdue Pharma, which makes OxyContin, would become a nonprofit company and make Narcan. Some oppose the terms of the deal, saying it violates the rights of those who may disagree. Time magazine is out with a short list for its 2023 Person of the Year. Some of the finalists include Taylor Swift, Chinese President Xi Jinping, and the Hollywood Strikers. The Person of the Year will be announced Wednesday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Connection lost.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Wall Street's kicking off the week with losses. Both stocks and bonds are trading lower in a signal that traders' aggressive pricing of interest rate cuts by the Federal Reserve may have gone too far. Right now, we have got the S&P 500 index trading lower by 27 points. That is a drop now of just about 0.6%. The Dow Jones Industrial Average is down 103, lower by 0.3%. While the NASDAQ Composite Index is down 131 points, a decline there of 0.9%. 10-year yield 4.29%, with a 2-year that's yielding 4.66%. Spot gold trading lower by $47 the ounce. That is a drop now of 2.3%. Back at 2024 on the precious metal. We've got Bitcoin today was trading above 42,000. Bitcoin right now is trading at about 41,500 on Bitcoin. While corporate insiders are increasingly betting on shares of their own firms, bosses at the S&P 500's best-performing company are cashing in. NVIDIA executives and directors last month sold or filed paperwork showing they intend to sell roughly 370,000 shares worth $180 million. This, according to data compiled by the Washington Service. Recapping, stocks are lower with the S&P down 26, drop there of 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate it. Just met Paul Sweeney live here in our Bloomberg Interactive Broker Studio doing the streaming thing on YouTube as well. So you can head over to youtube.com and search Bloomberg Radio. All right, so on my eco function here, factory orders off 3.6%. Durable goods orders off 5.4%. That seems kind of weakish. Michael McKee joins us. He's our big economics guy from radio, TV, and everything else we do here.
Does it all.
Does it all. So, I mean, factory orders minus 3.6%. That's worse than expected. Durable goods orders minus 5.4%. That's in line with expectations, but still a negative number. I'm still holding to a soft landing kind of scenario here, but the data points like this get you a little concerned?
No.
Okay.
This is kind of a weird report in the sense that it incorporates durable goods numbers that we already know and really adds non-durable goods to it to get the total of factory orders. And non-durable goods are a much smaller category than the durable goods because all this is put together in terms of dollars. And what really pushed down durable goods and has been the big weight on factory orders overall is that Boeing delivered fewer airplanes during the month, and that big difference knocked us down quite a bit. You take Boeing out of it, and basically it's about even. There is a category called capital goods, non-defense ex-aircraft, and that was worse than it had been. It came in revised down -0.3 from -0.1, and that was not particularly good news, but it's not a crash in the same way that the headline looks like.
Gotcha.
Now, potentially this week might be a little bit quieter for you, Mike, since it is a blackout
Till
week.
Friday.
Right, till Friday, right? We do have the JOLTS data tomorrow, but then, of course, that monthly jobs report at the end of this week. What are you expecting? I guess I'll first start off with JOLTS and then what you're expecting for the jobs report.
Well, JOLTS has been a hard thing to call because we had anticipated for quite some time that the number of job openings would go down as more people got jobs.
Still very
and
elevated.
It's been bouncing around. It's still very high, still over 9 million, and it's not expected to come down that far. Then there has been a question about how accurate it is, not only because there's a very low response rate for it, but because the way companies do this a lot is they'll buy 3 months worth of ads for a job, and if they fill it in the first month, the other ads stay up there. So there are still concerns about this being an overestimation of how many jobs are open. But since the Fed made it a thing, it's going to be a thing for Wall Street, depending on what other news we get tomorrow. ADP, same thing. It's not considered a major indicator, but it's a thing on Wall Street, and so it'll be a thing on Wednesday. Friday, jobs. That will be a thing for everybody.
Not for me, because I got a T-day Friday, so I'm not going to see
What?
you guys.
How did that get approved on Jobs
Does
Day?
a tea day go with tea time?
Potentially. We'll see how that plays out. Very good, Michael McKee, doing all the economic stuff for us here at Bloomberg. We appreciate that. All right, there's a little place out west called California. They have a lot of teachers.
They do.
In California. And they taught my youngest son, actually, he graduated from a California high school. And those folks save for retirement. Somebody's got to manage that money.
It's a lot of work.
Important. Our next guest does that. Chris Ailman, he's the CIO of CalSTR's California State Teachers Retirement System. Got a little lost between the 6th and 5th floor, but we found you. Chris, that was a heck of a November for these markets. What happened there?
That was the soft landing. We
That's
just
the
had the soft landing. Hallelujah. Rates are done. You know.
Did we see peak rates? Do you think we saw peak rates?
Maybe 25 just for, but we've hit peak rates.
Okay.
Yeah. But I don't think they need to ease anytime soon because that would imply a recession. They'll gradually step down, but the street's ahead of itself, and I think November was the signal it was a soft landing.
So how do you view markets heading into year end, and what's your outlook for 2024 as far as when we're talking about that soft landing scenario?
Yeah, that's the interesting question is I don't think anybody's happy about this soft landing and very worried because normally you would think that means the economy is going to take off, but you don't get that sense. We had a bit of a merger Monday, so maybe the market's coming back that way, but cautious and absolutely neutral on the asset classes. We're not going to take a bet. Fixed income's back. Municipal bonds are back, so you can buy and hold. I wouldn't trade. But private credit, there's just not a lot of opportunities. Everything's priced to perfection.
It's interesting because there still is a lot of pessimism out there from a sentiment standpoint. And when you square that away with a lot of the consumer spending data that's still really strong, what is it that's really pushing people who have a call going into next year thinking that the economy is going to substantially slow? What is going to be the catalyst?
You know, that's a tough question because I've been predicting a recession for 16 months, so I've been wrong the whole time.
Well, thank you for saying that because a lot of people were also in that camp and who have not admitted that they were wrong.
No, I'll fess up. I've been wrong a lot in my career. It happens. So I don't know what would cause that catalyst. I think the lower-end consumer is running out of money when you have weakness out of Walmart, out of Dollar Store, Sprint Airlines, Frontier having a few open seats. Maybe they're going to spend at Christmas. They're going to overextend, and so maybe we have a bit of a debt hangover in January, February. That's where we feel it. I'm getting nervous because you still see, like Spotify today, you still see layoff notices and reductions. We'll wait to see the employment numbers on Friday. They have been surprising us on the upside. So this is also called muddling along, and I think in a large extent that's what 2023 was about and 24 will be about.
All right. You've been doing this a long time here. I'm not commenting on his age. I'm just saying you've been around this block a few times. When you see a stock market up 18, 19%, whatever the S&P is here, but when you back out 6, 7 names and it's basically up 4 or 5%, what does that tell you?
Worries the heck out of me. Yep. I listen to you guys every day, so just a plug. I really do. I listen to you every day driving into work. California time.
That's right, Sacto.
You've been around as long as I've been around, and I will just say that that always causes for concern because we've seen that before in some technology names, and this is so extreme with that Magnificent Seven. So it's not healthy breadth in the market. I think that's another downside. Jess, as you said, what would cause the market to turn down? I think it's a high inflation number or an uptick in inflation, a worry about employment, and then everybody resettles their expectations.
Gina Martin Adams, have to bring her up, who over at Bloomberg Intelligence, who leads the equity side. She and her team did research on the concentration when you are looking, especially at mega cap tech. And even when there is heavy concentration, there's still time to make money between that concentration and when obviously there could be a flip in leadership. But from your point of view, I mean, is there still time for people will lose out if they're too concerned for too long? Will they end up losing out on making money? If they're too concerned about concentration.
Too concerned for too long, Cam. My staff will tell you, I've been a permit bearer through all of this, and it's not worked. Paul, I thought a global pandemic was a bad thing, but I found out now in my career it's a good thing. So I have been a bear, and that has not been the place to be. We're neutral on our equity weighting, and we have been over this 16-month bear market prediction and recession prediction because it's too expensive to be out. So I think you have to be fully invested. You have to pay attention to asset allocation again and be balanced. You can't just be in the magnificent seven.
So
Nobody
when you say
really
balanced,
is.
what are you advising clients?
I've been telling people, pay attention to fixed income again. It's back. Rates are up. It's at a decent place to invest. We're not putting new money to work in real estate or in private equity at these levels, just a steady investor in private equity. But really, private credit, it's hard to find opportunities again because the
Private
flip
credit.
side.
Paul's very into private credit.
Well, variable rate returns, you've got to do your homework. You've got to look at your credit analysis, absolutely. But that's been a very nice place to be because the banks are out. So a lot of the big pension plans, the Maple 8 in Canada, are investing in that area.
So what is, for CalSTARS, a typical asset allocation, equities, fixed income, alternates? What's typically been your model?
We have adjusted it over time. We're going back into fixed income. Our fixed income got all the way down to 12%.
Really?
We're going back. Oh, yeah, because there was just no return out of fixed income. Yep. So, equities for a long time was over 50%. That's coming down a little bit into the 40s. We're going to go to 15 in fixed income, but we're also heavily invested, 15 in real estate, 15 in private equity. We've got some inflation-sensitive assets. And we have another category we call risk mitigating strategies, a bucket of things, publics and privates, that diversify the portfolio. So if you go back to the big picture, we're 80-20, and we always have been. It's just the subcomponents have changed over time.
How concerned are you about this private credit business? Because it just feels like we're one or two big blow-ups away from everybody's eyes going to private credit saying, oh, my goodness, how much capital do these people have over there? I just feel like there's no really anybody. It's kind of the Wild West. Nobody's really looking at it.
I hear you. I think that, and you will, if you have a recession, you'll have some blow-ups in credit because people didn't do their homework. Covenant Light will come back as a real concern, paying attention. Credit work has always been about the underlying credit, the due diligence on the construction of the loan. That all still matters and always has. The big banks have stepped away from that middle market lending, and that's why we've been able to come in. So, yes, you're now seeing this wave of capital going in, but it's been going in place for about 4 to 5 years. It's not brand new. It's just using that term as more recent. I think it's going to be an investable area, but it will always have its stories. You're going to have your Silicon Valley banks and your First Reserves. That's just natural in life.
So no red flags brewing in private credit from your purview?
I don't think so because, spreads are tight, so that's a concern, but spreads are tight in the corporate bond market. But no, I don't think it needs added regulation, and I think I will just constantly caution people, do your homework on your credit analysis. Don't loan money to people who can't pay it back. Ultimately, they won't.
California, how's the economy out there?
Very mixed. People don't like inflation.
And I hate to say because that's a big state.
Oh,
so
yeah, very
like,
diverse. Well, and you guys, San Francisco was in the spotlight with APAC.
Yeah.
Not as bad as some people made it out. All the big cities are having trouble with homelessness. Southern California is doing okay. We get hit by higher fuel prices and higher energy prices.
Yep.
And I think we're going to be continually impacted by climate change, and people aren't paying enough attention to that. Stronger storms, aberrant weather.
How do you incorporate that? Because we have like everywhere else, we have a big ESG focus at Bloomberg. We allocate a lot of resources to it, but it's become politicized in the U.S., and I kind of feel like it's losing some of its time in the spotlight, at least here in the U.S. I know it's different in Europe. How does ESG go into your investment process?
Absolutely ingrained into everything we do. It's part of our core and our center. Larry Fink said he won't use the letters E, S, and G.
That's right.
That's become politicized. The idea of governance risks, environmental risk, employment, social risks still matter, and they're just part of long-term investment risk. And so I think we've got to get away from the initials and the political side and really focus in on long-term business risks, which absolutely matter. CEOs pay attention to this. They just don't use those initials.
Just real quick, 20 seconds. Do you think there's a positive correlation between climate change in your investment process and returns?
I think there will be over time. I think it is the biggest mega trend, Paul, that we're going to see in the next 10 years. It is absolutely going to dominate the investment landscape. We have to go through a huge energy transition.
I would love to be at a table. Maybe I'll get this dinner. his counterpart in Texas, his counterpart in Florida.
That'd be
See how that
fascinating.
Hey, I talked to Jay Salby, Texas teachers, good friends with Florida.
Yeah.
We'll meet you at your tea time on Friday.
Exactly. Very good. Chris Ailman, thank you so much for joining us. Really appreciate it. Chief Investment Officer at CalSTRS. Right now, let's get world and national news with Nancy Lyons.
Israel is moving tanks and troops into Gaza following the end of a temporary truce. The focus from the Israeli is no longer just northern Gaza, but also southern Gaza, where many civilians were previously moved to avoid the conflict. Israeli Army spokesman Rear Admiral Daniel Hagari says Hamas is the reason the fighting has resumed, and he's promising Israeli forces will do what they can to minimize Palestinian civilian casualties.
We pursued them in northern Gaza. We're now pursuing Hamas in southern Gaza too. We will operate in maximum force against Hamas terrorists and infrastructures while minimizing harm to the civilian that Hamas places around them as shields.
Rear Admiral Daniel Hagari says Israel is urging the Red Cross to continue pursuing access to the remaining hostages to ensure they are safe. Protesters outside the Supreme Court earlier today
People die! Backwards line! People die!
Showing their displeasure with the bankruptcy settlement with the maker of OxyContin, Purdue Pharma. The Supreme Court justices have been hearing arguments in a multi-billion-dollar bankruptcy settlement with Purdue and deciding whether the Sackler family can evade lawsuits over the opioid drug that's been linked to thousands of deaths. The newest group of Kennedy Center honorees include comedian Billy Crystal, singers Dionne Warwick, Barry Gibb, and Renee Fleming, as well as actor-singer Queen Latifah. Well, they were all celebrated last night at a star-studded event commemorating their lifetime achievement in arts and entertainment. President Biden spoke at a reception ahead of the Kennedy Center honors.
Performing arts are more than just sound and scene. They reflect who we are as Americans and as human beings.
The 2023 Kennedy Center honors ceremony will be broadcast on December 27th on CBS. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to Paul and Jess.
All right, Nancy Lyons, thank you so much. We appreciate it. It was great getting a few minutes with Chris Ailman from CalSTRS.
It's fabulous hearing everything.
Over $300 billion in assets under management. I mean, I would think doing that kind of, managing that kind of portfolio would be like, wow, we really have to do a good job because all these teachers, retired teachers, are depending upon us.
depending on how that performs. But it was great getting him here. I know that we have such a big office, Paul, that we couldn't find him for a little bit, but then he found his way over to the Bloomberg Interactive Brokers studio where the stars always align.
Exactly. All right, what do you got for us here?
Well, of course, Elena Pompina.
Oh, and I see this. Very good. So, nice story.
Pompina and I, we ran a story in the terminal over the weekend. So eerie calm in the S&P 500 signals historic rally has staying power. So Elena was joining with us earlier. She's taking a look at how the S&P 500, it's averaged a daily move of 0.3% in either direction in the last week. So this is actually the tamest swings in about a half a year. And so there was so much debate about the big rally that we did see in November, whether or not that could have staying power. But when you are looking at during time periods in the past where we've seen something like this, it's tended to be more of a bit of a consolidation, has led to more gains. And I know a lot of people have talked about RSI being around 70 for the S&P 500. We were crunching some numbers, and it's a rare occurrence to see that happen. But typically when it has, at least in the short term, it's led to more gains. And then, of course, we are in a seasonality bullish time period, especially in December. In the first half, though, tends to be a little bit weaker, but usually, but we've seen small caps begin to take off, and this has historically been a bit of their time to shine. But more broadly, the S&P 500 tends to pop in the middle of December when you look back. Jeff Hirsch over at the Stock Traders Almanac, crunching some numbers there. But usually, December's the third best month behind November and April, and averaging a gain about 1.4% if you go back to the 1950s, Paul.
All right, interesting. And I see here you guys reporting to equity bulls. The price action shows that risk-on spirits haven't generated the sort of euphoria that often precedes routes, and it demonstrates how reluctant investors are to cash out with the broad equities benchmark roughly 4% from a record high. So we'll see how this plays out. But very interesting article that our two intrepid reporters, Elena Popina and Jessica Menton, put together, and looking at this market breadth. S&P 500 off 0.5% right here. We're going to have more coming up. This is Bloomberg.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Israel widens its war against Hamas as the U.S. repels multiple drone attacks in the Red Sea. Welcome to the fastest show in politics as the pressure rises geopolitically and domestically. With big questions now about funding our allies in Israel and Ukraine. We'll have the latest for you and discuss with Brett Bruen, former diplomat, now head of the Global Situation Room here in Washington. The White House sends a new warning about Ukraine, and George Santos seizes on a Sound On interview from just last week to attack a former colleague. We'll have all these stories and talk about with our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are along for the hour, and it's all after a look at Wall Street. Let's get to New York trading right now with Charlie Pellet. Hey, Charlie.
Thank you very much, Joe Matthew. Indeed, we have got the Dow, the S&P, and NASDAQ all in the red after a winning week for the U.S. stock market. Back to work Monday, and the S&P now slumping by 26 points to 45.68, a drop now of 0.6%. Dow is down 89, lower by 0.2%. The NASDAQ 100 index down 1.1%, while the NASDAQ Composite Index is down by 0.9%. 10-year yield, 4.28%. The 2 years now yielding 4.65%. Spot gold, big move there, down 2.3%. Precious metal now at $20.24 the ounce, while West Texas Intermediate crude down 0.4%, 73.76 a barrel. Cannot ignore Bitcoin, was trading above 42,000 earlier today. Right now, Bitcoin up 41,588. Bitcoin is up by 4.7%. Well, as for the overall market backdrop, Greg Peters is co-chief investment officer at PGIM Fixed Income.
So if you look at what's being priced in the market, it just is curious to me because to have so much in the way of rate cuts at this point with a soft landing, it is really quite curious to me. So I think the markets have really pushed the envelope here to such an extreme that it's making it really difficult to be successful from an investing standpoint.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Spotify cutting 17% of its workforce, marking at least the third time that the streaming services carried out mass layoffs this year in an effort to shrink costs and drive profitability. Spotify shares are up 8.7%. Twilio, meanwhile, cutting 5% of its workforce in its third major headcount reduction. The cuts primarily affect salespeople for Twilio's consumer data platform and contact center software. Twilio up now by 0.2%. Recapping a down Monday, S&P down 27, a drop there of 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thank you. Welcome to the Monday edition of Bloomberg Sound On. We're back in Washington. I'm Joe Matthew, and glad you joined us. It's been an important couple of days here over the course of the weekend. I want to bring you up to date, for starters, on what is happening in Israel. Our top story today on the fastest show in politics, as Israel widens the offensive in Gaza. Remembering, of course, the truce fell apart last week, and they've had a couple of days to plan what everyone's calling the next phase here. The IDF expanding operations across Gaza and looking to the south now, with the expectation of a ground invasion of southern Gaza imminently, as many of the territory's 2.2 million people being urged to evacuate, and in many cases, it's again which is starting to create a lot of confusion. Remembering, the first evacuation was to the south. But of course, in many cases, Hamas followed the civilians there, and the IDF is now following them. They've been dropping leaflets. They've been issuing maps now, marking zones that have been broken into more than 2,000 blocks to try to give people a sense of where they should be going. And it's all coming against the call for restraint here in the U.S. from the administration, from members of Congress, as well as the Pentagon here. We heard from the Secretary of Defense, Lloyd Austin, who is speaking at an event here, the Secretary at a keynote speech, the Reagan National Defense Forum in Simi Valley. This is from over the weekend. The SecDef Lloyd Austin here.
This kind of a fight, the center of gravity is the civilian population. And if you drive them into the arms of the enemy, you replace a tactical victory with a strategic defeat. So I have repeatedly made clear to Israel's leaders that protecting Palestinian civilians in Gaza is both a moral responsibility and a strategic imperative.
That's where we start our conversation with Brett Bruen. I'm glad to say he's with us today, a longtime diplomat, now president of the Global Situation Room here in Washington, D.C. Brett, what are your thoughts as we appear to be walking into phase 2 now, and it could be one that is even more deadly for civilians living in the Palestinian area, here specifically Gaza?
Well, I think it's important, Joe, to account for what Israel sees as their top priority, and that is to reduce, if not eliminate, Hamas's capability for attacking them. And important to bear in mind that those attacks continue. In fact, they were what broke the ceasefire between Israel and Hamas. So Israel sees this very much through the lens of we have to protect our population, we have to protect civilians. And at the same time, you know, Secretary Austin's admonishment or advice to Israel, I don't know that it goes very far, because it on the one hand, yes, is repeating the obvious, but on the other, Israel would look to the U.S., look to the U.K., to others who had operations in Iraq, Afghanistan, and contended with many of the same issues, and yet we would not necessarily have taken kindly to the Israelis telling us how we should carry out those attacks.
I really get it. But to the Secretary's point, it might not really matter what the U.S. has to say here. If the math is correct that we've heard from any number of analysts here, and Congressman Seth Moulton mentioned himself, you know, for every member of Hamas you kill is not as important as how many civilians you kill and how many terrorists you create, Brett.
Without question. And, you know, having served on a contingency operating base in Iraq outside of Tikrit, very cognizant that that military operation and how heavy you go into those military operations has a direct link to the support that you enjoy from the local population. And yet at the same time, and this is where I think it's really important for listeners of Senate, many of whom are policymakers and work up on the Hill, what is the alternative? What is the solution or the strategy that you're proposing? Because we've seen a number of members of Congress saying, well, they simply should create a coalition of allies and they should establish a two-state solution. But it's the question of how you get there, and I haven't heard anyone yet articulate that in a cogent way.
Endgame. I do understand that as we spend time with Brett Bruen. I also wonder about our own assets in the region here, Brett. It was quite a wild weekend for the U.S. Navy, shooting down 3 drones during an extended attack in the Red Sea. The Pentagon saying that U.S. forces are considering all appropriate responses to the attacks. A string of attacks on commercial vessels, they say, representing a direct threat to international commerce and maritime security. Is this not a new front?
It is without question, and perhaps the most clear and present danger that American forces in the region have faced in recent years. And Joe, I think it raises a critical question for Congress, which still has to resolve the longer term budget implications, as well as obviously the appointment of several senior military positions. Why are we handicapping ourselves? Why are we engaged in some of these other distractions when the focus ought to be on the safety of our soldiers, our naval forces, which at the moment clearly are facing significant threats?
Significant threats from Iran-backed militants. We should be specific about this, and we've seen this come from Houthi rebels in Yemen, for instance, repeatedly. How much more concerned are you about the situation there as we have two carrier strike groups in the region, Brett, about what we might see next?
I think that Iran is taking advantage of this moment to engage and, in fact, to accelerate some of its activities. Let's not forget they're obviously still quite frustrated with the fact that they were not able to achieve sanctions relief under the Biden administration. They're cognizant of the fact we're heading into another presidential as well as congressional cycle. These factors, I fear, Joe, are going to lead us to seeing more efforts, not only within the region, but more broadly from Iran as they're trying to increase the pressure on Washington to provide them with some sort of sanctions relief.
Brett, it's great to have you. Global Situation Room President, a former diplomat with us again here on Bloomberg Sound On, a voice we frequently rely on at times like these, trying to feel our way through what the next steps might be here. U.S. Central Command says those attacks on the U.S. vessel in the Red Sea were, quote, fully enabled by Iran, unquote, in response to the Israel-Hamas war. And they don't even necessarily think that the warship was targeted. They may have been going after commercial vessels, but that is still, of course, not going to be workable here as we assemble our panel for their thoughts on an important weekend. Rick Davis and Jeannie Shanzano join now, Bloomberg Politics contributors. Rick, how concerned are you with this continued attack? We'll get to the situation on the ground in Gaza, but the continued attacks on U.S. warships in that area, in some cases with sophisticated weaponry.
Well, I think that it undermines or underlines a lot of the discussion we've been having about the concerns you mentioned about opening up multiple fronts, you know, whether it's through Lebanon and the West Bank or through the Houthis or directly with others from Syria that are all part of a terror ring supplied by Iran. And the fact that we are leaning in on this attack and saying that the Houthis were directly coordinating with Iran is, I think, raises the bar quite a bit on U.S. response. Our job, our Navy's job, is to keep sea lanes open in that part of the world. So whether they're attacking our ships in a military way or commercial vessels, it makes no difference to the U.S. Navy. That they're there to protect both commercial vessels and civilian lives, and they're going to do that. And as I understand, too, there were a number of drones coming too close to naval vessels. Whether they were monitoring, attacking, or what, we don't know. But my understanding is that the Navy responded as if it was a lethal attack, and as well they should. The Houthis have been known to take on much bigger foes in these kind of hit-and-run episodes.
They've been trying to board tankers in the area. They've attacked U.S. ships before. Jeannie, should we be more focused on what's happening here in the tertiary zone around Israel? We're talking a lot about what's happening on the ground right now in Gaza, but our ships are being attacked.
That's right. And the Houthis taken public responsibility for these attacks, and the USS Carney involved it all day Sunday, they say over 7 hours, addressing these attacks. You know, whether or not the USS Carney or the United States was, you know, the focus or the target, the reality is they were under attack and defending, as Rick said, these ship lanes. And so we have no choice. And let's just go back to when this all started, right after October 7th. The administration said, in addition to getting our American hostages back and doing what we can for civilians and on humanitarian grounds, our number one focus has got to be containment. We cannot get dragged into this any further. So while that happened Sunday, what is Bloomberg reporting today? Vladimir Putin coming to Saudi Arabia, right. A very rare trip for somebody in the midst of a war. So you couple that all together in this issue of containment, very, very concerning, as it looks like we are getting dragged and pulled potentially into this further. And that is something that is not in the United States' interest.
As far as what's happening in Gaza, Rick, should we be asking about another truce? This is the first thing that most folks ask when they talk to administration officials. It's coming up, obviously, with lawmakers here because it appears that everybody's gone home. Negotiators have left the table. They've left Qatar. Are we beyond the point of a truce or a pause being rebuilt to get the rest of these hostages out?
I don't think so. I mean, it required pretty significant hostilities. The Israeli army moving into Gaza in order to facilitate the first discussion of a hostage release. And maybe that's what it'll take this time, too. I would say that all the discussion this weekend about civilian casualties, of course, there should be a moral imperative to save civilian lives. But these are also civilians who have fostered a relationship with Hamas, who have been trained since they were in school as young children to hate and want to kill Israel and to hate the United States. So it's not like we're in a benign environment where these people are victims of Hamas. They have been supporting Hamas as long as Hamas has been their government. And it's just a very unusual situation where a terrorist organization is running a country.
It is pretty remarkable, Jeannie, and we haven't figured out the funding situation here. We'll get into this a little bit more coming up later in the hour here. But if Congress can't get out of its own way to figure out a funding package for Israel, will this conversation move on to something else? Does Tel Aviv actually need the money that we've been talking about here? I'm trying to get a sense of the urgency because the White House says time is running out in Ukraine. I don't hear that claim about Israel.
We don't hear it, but it is critically important that the United States Congress step up and not step on its own foot, as you were talking about, and get this funding done. You know, it may not be as critical right this moment. They will be able to proceed without it, but it is important that we give the funding and we do it. But it's got to be done properly. And that means the United States policy has got to be clear. And that is, you know, what you hear so much feedback on in New York just over the weekend, more and more demonstrations. And people need to be heard on this. The administration has to be clear before that funding goes out as to what we expect. And that means the funding has to be given in line with our priorities and policies. There can't be a blank check, where there never should be when it comes to giving public money to another country.
Sure, and as we're reminded, that is typically the case when we're giving funding to a country like Israel or Ukraine. And we're going to talk ahead about exactly what the path might be here, not just strings attached, but whether a border deal could happen. I guess those might be considered strings. And if Israel and Ukraine can move at once, because we've got a new message from the White House. The budget director has sent a letter up to the Hill saying Ukraine is out of time, and if it's not handled now, we'll be out of money. We'll talk about that next with Rick Davis and Jeannie Shanzano on the Monday edition of Sound On. I'm Joe Matthew. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. A lot of red on the screen. A winning week last week, but a down Monday. Back to work Monday with the S&P now down by 29 points, a decline there of about 0.6%. Wall Street kicked off the week with losses, both stocks and bonds down, and a signal that traders' aggressive pricing of interest rate cuts by the Federal Reserve may have gone too far. Right now, we've got the S&P down 29, drop there of 0.6%. The Dow is down 75. A decline of 0.2%, while the Nasdaq 100 index is down 183 points. That is a drop of 1.1%. 10-year yield 4.29%, with a 2-year 4.66%. We do have Bitcoin rallying today by 4.8%, 41,628. Did see trading above 42,000 earlier today on Bitcoin. Gold down $47 the ounce, a drop there of 2.3% to 2,024, and West Texas Intermediate crude down 0.8%, 73.47 for a barrel of WTI. Starbucks shares lower again today, extending their losing streak for an 11th straight session, which would be the longest rout on record for the coffee retailer. Starbucks shares now lower by 1.4%. Recapping, S&P down 29, down 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The budget director at the White House has sent a letter up to Capitol Hill about Ukraine, and it's not great. Shalonda Young writes, without congressional action by the end of the year, we will run out of resources to procure more weapons and equipment for Ukraine. The very simple line, quote, we are out of money to support Ukraine. And she points in this letter, interestingly, to specific defense systems that are being made in key states. Hello, Republicans, Alabama, Georgia, Texas. That's where a lot of this money would go, of course, to American defense contractors. But if it all hinges on a deal surrounding the border, we didn't have a good weekend. Talks apparently fell apart on Friday. We just crossed a headline on the terminal here, Senate GOP moving in wrong direction on border. So let's reassemble the panel for their take. Rick Davis and Jeannie Shanzano join, of course, Bloomberg Politics contributors. Shalonda Young, the budget director, Jeannie, is pretty serious in this note. She says there is no magical pot of funding available to meet this moment. We are out of money and nearly out of time. Will it have an impact on the debate?
It should, and I think it will. And she makes a critically important point about where this money is coming from and going to, rather. And it's a point that the president has been trying to stress. He tried to stress it in his Oval Office address. The administration has been trying to make it. I'm glad Shalonda Young is making it now because it is critically important. This money is not just going out of the United States to another country with no positive impact on the United States. Beyond the issue of autocracy, which is critical enough in defending democracy, it also is a boon to our economy. So they're trying to make that important argument. And of course, now they are facing in the House a speaker who has twice voted against funding, but has now publicly said he will support it, provided we get something on border. So, you know, the message has reached somebody who has been on the fence on this in the past, and they know that, but they're trying to reach over even the heads of the leaders to the representatives from the red states and make this case, and also obviously to people living in the red states who depend on these jobs in the defense industry and others. It's a really important argument for them to be making vociferously at this point because time is running out, as they say.
We'll get into the border potential, at least for a border deal here in just a second, Rick, but I wonder your thoughts on the message. There's another line that jumps out here. By the end of the year, we will run out of resources to procure more weapons and equipment for Ukraine and to provide equipment from U.S. military stocks. So we now know we've drawn down our supplies as far as we can here. there does seem to be more information here than we've heard recently. Basically, by the end of the year, we are out. Will that motivate skeptical Republicans?
Look, I mean, it helps put pressure on skeptical Republicans. It helps also support Ukraine itself in the sense that, we're trying to get this through before the end of the year. And it sends a message to the Europeans that, if in fact you can't count on us, you need to be prepared to fill the vacuum. Europe's done a good job of supporting Ukraine. There are issues with Ukraine funding in Europe, just like there are here. And I think the White House is doing the right thing by putting everybody on notice that the war is going to continue whether or not we get this package passed before the end of the year. I'm hopeful that Senator Langford is right. On a Sunday show, he said he could get it done before the end of the year, and that would make, I think, a big impact.
Here is Senator James Langford, as Rick mentioned, in his take on talks. He's been at the center of these negotiations.
There's a reason that this hasn't been done in decades, because it's hard. It's very technical work, and there's a lot of challenges that are in it. And anytime you deal with border security, there are a lot of complicating features in this. So we're going through very, very detailed work.
Speaking on ABC this week, Jeannie, it's his job, I guess, to sound optimistic here as one of the lead negotiators. Are you?
He did. I was stunned by how optimistic he sounded, pleasantly surprised. And of course, then we hear Democrats walked away. The reality is, obviously, as usual in the Senate, as hard as this is, you can imagine them coming to an agreement. But it is this push in my mind from the House for H.R. 2 that is going to make this a non-starter in the Senate. And I think that's where we have to see movement. Things always look worse before they get better in Congress. So hopefully that's the case here. But to Langford's point and the history we know, we have been talking about Congress moving forward on immigration for decades to no avail. If they can do this with on the books, 8 days left in the House session before they end in December, I will be stunned and happy beyond. But I am not as optimistic as Langford, and I do hope I'm wrong. But how do you do this? And if they don't do it now, how they do it in an election year, it's almost unthinkable in my mind.
We're spending time with Rick and Jeannie on Bloomberg Sound On. It's the Monday edition, and we're glad you're with us here on the radio, on the satellite, or on YouTube. Of course, the Republican majority in the House, Rick, is dealing with a slightly smaller majority here. And I have to ask you both about George Santos's exit last week, because one of the first things he did was retweet a video from this program, from Sound On. And I want to bring you back to the interview we had, I guess it was Thursday, the day he was expelled, with Nicole Malliotakis, his colleague from New York, who called for his removal. Here she is, just to jog the memory, the Republican from New York.
We have to take action and remove him. Now, he will have his day in court as it relates to the criminal charges.
Right.
But in terms of being able to continue his service in Congress, we believe we have seen enough and that he does not merit to continue serving in this body, and his constituents do deserve better.
Well, lo and behold, that was posted to Twitter, and George Santos reposted it with quite the message. He writes, "Let's talk about hypocrisy. Can someone ask Nicole Malia stock tips? When did she become a savant in stock trading?" He goes on to accuse her of insider trading and more. It gets very personal to the extent that I wouldn't be comfortable reading this on the air, and he hasn't stopped there. He's in a back and forth now with Representative Brandon Williams, who he refers to as drunken Brandon Williams, and refers to assault charges here on Twitter. I'm not even sure what to ask what you think about this, Rick, but you've got an arsonist here, it looks like, who's going to try to out lawmakers as long as he can. Could this be a problem for the Republican conference?
I love that phrase. He's a political arsonist. And so, yeah, I mean, will he be a problem for Republican lawmakers? No, they've turned the page. No one's going to pay any attention to this guy. Is he full of fabrications, lies, and innuendo? Absolutely. That's how he got into this trouble. So I don't think anybody's going to take seriously much of what he says. And frankly, I suspect he probably has to turn his attention to his legal problems, which is the only thing, that keeps him from right now wearing an orange jumpsuit for the rest of his life. So we'll see how it all ends with the fabulous. But no, I don't think anybody on Capitol Hill is spending 10 minutes on this one today.
Well, Jeannie, I'm just glad to know he's watching you and Rick on YouTube here. And I guess he's got a lot of time to do that now. To the former congressman, we're on 1 to 3 every day. The media might care, though, if you keep lobbing Molotov cocktails like this. They're going to follow up on some of them, Jeannie. Well, that could be uncomfortable for a few members of Congress, couldn't it?
Absolutely. And that's what he promised when he was leaving. And I urge everybody to go back and listen to what Nicole Malliotakis told you. She had a lot of courage to say it. She is absolutely right. We know why he is lobbying these absolutely unsubstantiated claims against her. I only wish her own leadership had the fortitude and the strength to vote with her to throw him out, because that's absolutely the right decision in this case. Although I should say, now that he's out, you're right, he has more time to listen to and watch sound on. So there's always a benefit here.
You know, I guess that's good for anybody, Rick Davis. We'll keep you posted on where this goes. But is one less seat, Rick, an actual game changer for Speaker Johnson? When it's already that tight, does it matter?
You know, look, if he's going to try and pass legislation on party line votes, sure, that really makes it tough. We'll see that coming up if he decides to go forward with impeachment against the president and the Secretary of Homeland Security. That could be a party line vote where only a couple of members could scuttle the efforts that he has to put that on the agenda. So sure, it doesn't help him one single bit.
We're going to hit the campaign trail next. It looks like Obamacare is back in the air here. Some interesting remarks from over the weekend from Ron DeSantis, sounding not unlike Donald Trump, who had quite a weekend on the trail as well. And we'll hit that next with Rick and Jeannie. I'm Joe Matthew in Washington. Let's bring you up to date now with world and national news. Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The expansion of Israel's war on Hamas has some worried civilians will once again be caught in the crossfire. Southern Gaza was hit by airstrikes overnight, and that's where many civilians had gone after being warned of attacks in the north. Bloomberg's Anne-Marie Horduran spoke with National Security Council spokesman John Kirby about those concerns.
I asked Admiral Kirby, where do they go? And his answers were that they told Israel that they do not support southern operations unless they factor in all the civilians. And then his second point is that they urged yet again to think about how to make sure civilians are safe and pursue operations that account for civilians.
Bloomberg's Anne-Marie Horduran reporting.
I had that here for the longest
time.
The
COP28 summit is putting the focus on greenhouse gas emissions, and the U.S. Special Envoy for Climate Change, John Kerry, says satellite surveillance is making it easier to track polluters. He issued a warning to the biggest polluters, quote, "You can run, but you cannot hide." He said they all need to be prepared to name and shame. Doug Burgum is ending his presidential bid. When the Republican governor of North Dakota announced his candidacy back in June, he wanted to focus on middle America.
Small town values are at the core of America. And frankly, big cities could use more ideas and more values from small towns right now.
The wealthy software entrepreneur participated in the first two debates, but failed to meet the criteria for the last one and for the one that's coming up this Wednesday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all moving lower right now. The S&P is down 30 points. That is a drop now of just about 0.7%. Dow Jones Industrial Average down 68, decline there of 0.2%, while NASDAQ is lower by 150 points, a decline of 1.1%. 10-year yield, 4.28%, with a 2-year now yielding 4.65%. Spot gold down $48 the ounce to 2023, a decline of 2.3%, while West Texas Intermediate crude is down 1.1%, 73.24 a barrel. Oil is retreating as Saudi Energy Minister Prince Abdulaziz bin Salman says the OPEC Plus oil production cuts can absolutely continue past the first quarter if needed, as he pledged that the curbs would be delivered in full. The Labor Department issues the November employment report in Washington on Friday, and it could portend moderation. And with more on that story, here's Bloomberg's Vinny Del Giudice.
Right now, economists are forecasting a November job gain of about 180,000 jobs. That would be well below last year's average. The unemployment rate, meantime, has been creeping higher. It's just shy of 4%, a level last seen in January 2022. The Federal Reserve's economic survey, the Beige Book, says businesses are trimming payrolls. Vinny Del Giudice, Bloomberg Radio.
Hawaiian Airlines shares are surging after the airline agreed to be acquired by Alaska Air Group for $1.9 billion in cash and debt in the latest attempt to consolidate the American aviation industry. Hawaiian is up 187% right now. Alaska shares are down 14.7%. Recapping, stocks are lower. S&P down 31, a decline right now of 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Prepare for a tortured debate over Obamacare on the campaign trail. We're, of course, getting ready for the next Republican debate. It's in Alabama on Wednesday night. And I wonder if they spend much time on this. It hasn't been a big feature of this Republican campaign when you start talking about domestic policy, personal finance, economics, and so forth. But Donald Trump has been known to go there. He even did it in the White House. Remember, in 2 weeks, I'll have a plan. And then they would ask, no, in 2 weeks, I'll have a plan. It's going to be the best plan. It's going to be better than Obama's plan, and I'll have it in 2 weeks. Ron DeSantis decided to go there on Sunday morning television. He's on Meet the Press, says he will have a plan that, quote, supersedes the Affordable Care Act. Let's listen.
Well, we're going to be working on, probably in the spring, we'll roll out a big proposal. I've got a lot of input that's been coming in from a lot of good people around the country, but we will definitely be addressing insurance. We'll definitely be addressing big government, and we will be addressing big pharma. You know, we pay more for drugs in this country than anybody else in the world. I'd like to see some equity across these developed countries so that our consumers are getting relief. Obamacare promised that. It didn't deliver. So we're going to do something that actually works.
All right, let's reassemble the panel with Rick Davis and Jeannie Shanzano. Jeannie, in the spring, isn't this going to be over in the spring?
Yeah, it's almost over for Ron DeSantis in the next few weeks, so he better move very quickly. And the reality is, you know, you see DeSantis once again following Donald Trump, trying to out-Trump Trump. He can't do it. And the reality is the Affordable Care Act is popular among 6 out of 10 Americans. And Florida does not have a strong record as it comes to the number of uninsured and as it comes to the cost of health care. So I think what we're going to see, rightly so, is the Biden campaign and the White House respond to this in full measure. You want to Florify our country as it pertains to health care. Bring it on. That's a battle that they want with DeSantis and want with Trump. And by the way, on Trump, why didn't he do this when he was in the White House? It's another in a long line of promises he made that he didn't keep, and now he's trying to do it again so he can keep out of jail. It's the exact debate that White House wants to have. The more they talk about this, the better off.
Yeah, I don't know your thought on this, Rick. Is this fertile ground for a candidate? I mean, Obviously, it's a long road to pass health care reform in this country. You could put up a detailed plan that serious people thought out and maybe win some minds with that. But do you go on Meet the Press and say you're going to have something in the spring?
Yeah, it doesn't make much sense for him to change his tune this much. I mean, to wade into Obamacare, to wade into the healthcare debate. As Jeannie said, it's a little bit the platform of the Democratic Party to want to fight Republicans on this side. The minute you start talking about actual reforms, you're leaving people out. You're raising, taxes to pay for it. I mean, like, it's just full of all kinds of booby traps. I mean, ask Mitch McConnell and skinny reform. Down it went. And so, yeah, I mean, he won't be the first Republican to complain about it. But if he does put something up, he may be the craziest Republican to want to take shots at it. Go back to wokeism and start fighting that fight again, Ron. That worked pretty well for you last time, didn't it?
Well, you just reminded us of a really important moment when John McCain gave the famous thumbs down. Donald Trump's still talking about it. He mentioned it just last week on the campaign trail, Rick. Are we looking at this as, a decade later or whatever it is now, it's been more than that, as the law of the land, or do Republicans still see, I guess, across the valley somewhere, this repeal and replace movement?
Yeah, I think we're kind of living in the past on that. There is no question that in 2016, 2018, voters were not happy with Obamacare. In places like Arizona, John McCain's state, that, you used to have a vibrant insurance market, and Obamacare got it down to one insurance company in the state of Arizona, and prices went up 50% on people who wanted to buy insurance. Now, there was nothing popular about that. But over time, there's been more efficiency, there's been more access, and I think voters have kind of, gone a separate way. They don't see it as a big issue. And the reality is it is tied to Medicare and Medicaid in regards to what you're going to do to reform healthcare. Many of the things about drug pricing are more related to Medicare, Medicaid than it is to Obamacare. And so, let's get into a real debate if you want to, but I wouldn't advise it from a political perspective.
Well, so how about the other side of that coin, Jeannie? Should Joe Biden be running on improving, on strengthening Obamacare?
Yeah, he absolutely should. Look, this is what helped the Democrats in 2018. They would love to have this battle. To Rick's point, what was said on the campaign trail changed an awful lot as the polls changed on this, and American support for Obamacare, the Affordable Care Act, grew. And so in 2018, it was winning for the Democrats, and they would like to repeat that. And so, I think, as in so many instances, Donald Trump, and then, of course, little Trump, Ron DeSantis, running right behind him, are living in the past, and they don't seem to be recognizing the reality is that if you're running for 24, you should really be focused on the future and not the past. But in this case, if they want to focus on the past, Democrats are going to be all for it, because this is a winnable argument for Democrats, and they are gung-ho to do it. In fact, the White House says they're going to be releasing something on this today. So stay tuned. If they want to go here, it's going to be something the White House is going to embrace.
Well, we're going to get the cut later today on the Republican debate in Alabama Wednesday night. Rick, do you think the stage looks just like it did last time around? We've heard Chris Christie might have some trouble.
Yeah, I've been hearing Christie might have trouble getting on that stage. And obviously, if he doesn't make it on the stage, you have to just set the timer for how long it's going to take him to get out of the campaign. Because the reality is he wants to use these debates as his way of cutting through some of the political noise, and he doesn't have a lot of campaign cash to do it. So I think that could be a bombshell. But I'm waiting for Ron DeSantis, who attacked Alabama's football team for taking the place of his sacred, undefeated Florida team. And I can't wait to see how the crowd reacts to him on Wednesday night.
It's never the policy, is it, that gets you booed when you show up somewhere in the field. Rick Davis and Jeannie Shanzano, always a great conversation. Some final thoughts next as the House GOP goes after vulnerable Democrats who voted against a migrant funding bill. We'll explain it. It's an interesting ad campaign. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Spotify Technology is cutting 17% of its workforce, marking at least the third time that the streaming service has carried out mass layoffs this year in an effort to shrink costs and drive profitability. So how does this play into the larger job-cutting picture by tech firms? Constance Hunter is Global Head of Strategy and ESG at Corebridge Financial.
When you look at a company like Spotify, you have to think about how these companies reacted during the pandemic. A lot of them overhired and really staffed up during the pandemic, and now they're sort of right-sizing their businesses for a more trend-level growth as opposed to the blockbuster growth we saw during the aftermath of the pandemic.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Spotify shares, they're up now by 7.7%. Twilio is cutting 5% of its workforce in its third major headcount reduction. Those cuts primarily affect salespeople for Twilio's consumer data platform and contact center software. Twilio shares are up by 0.1%. Richard Branson does not plan further investments in Virgin Galactic Holdings. That's the unprofitable space tourism venture he founded. This, according to the Financial Times. Shares of Virgin Galactic down now by 17%. And those are some of the top company stories that we're following for you at this hour. And this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We are live from Washington, where Republicans in the House are out with a new digital ad campaign that uses AI to target Democrats. We'll explain that next with our panel after we get up to date on world and national news. Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Tomorrow marks 60 days since the beginning of the war between Israel and Hamas. The Israeli military says it is expanding its ground assault to all of the Gaza Strip. Some residents in the region say there is nowhere safe to go now as the fighting begins to spread to southern Gaza. As Bloomberg's Amy Morris reports, this is prompting a warning from the U.S.
Privately, Israeli and American officials say they do see eye to eye on Israel's main objective to dismantle Hamas. But over the weekend, American officials from Secretary of Defense Lloyd Austin to Vice President Kamala Harris said the civilian cost of the war is getting too high. Officials say the U.S. wants to see safe zones to limit casualties. A week-long truce collapsed on Friday, and the resumption of fighting is raising fears that the conflict will spread across the Middle East and destabilize the region. In Washington, Amy Morris, Bloomberg Radio.
The Senate is set to receive a classified briefing tomorrow on Israel and Ukraine. That's according to multiple news outlets as the debate heats up over President Biden's $106 billion emergency foreign aid request. Bloomberg's Zach Cohen says tying that aid to border reforms has been the key issue.
The real hangup has been on border security. Oklahoma Senator James Lankford, who we heard from over the weekend, thinks they can get a deal by the end of the year. And remember, the Senate's supposed to leave town by the end of next week. So time is really ticking down to try to untie the Gordian knot that is border policy and something that has bedeviled Congress for decades.
Again, Bloomberg's Zach Cohen. Last week, the Merriam-Webster folks picked authentic as the word of the year. Today, the Oxford English Dictionary came out with its own word of the year, riz. That's short for charisma, describing someone's ability to flirt and attract someone romantically. It can be used as a verb or a noun. Other words that were considered by Oxford included swifty and situationship. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe.
All right, Nancy, thank you. I think I'm going to stick with authentic. And that would apply to what the NRCC is doing here, up with a new digital ad campaign. This is, of course, the campaign arm of the Republican-led House, out with a new ad campaign that attacks Democrats who voted against a Republican resolution that we discussed right here last week on Sound On. It was Nicole Maliotakis's resolution to ban the use of federal money to house undocumented migrants. The NRCC up with a new ad now that uses AI to create these images of national parks overrun by illegal immigrants. The Grand Canyon, Yellowstone, turned into tent cities. And you better believe there's a video to go along with it.
Oldest, largest, and one of our most beautiful vacation lands, antelope feed peacefully on grassy slopes. Herds of buffalo live in these mountains, a symbol of our
beautiful
vanished
landscapes
frontier.
of national
The early
parks.
pioneers pushed their way laboriously across this country. But it's only in our great national parks that we've preserved unchanged the really wild things and the immense wilderness they knew.
And you see tent cities going to the horizon, lining the beautiful rivers of Yellowstone or whatever park it was you're seeing at the time. Final thoughts from our panel, Rick Davis and Jeannie Shanzano. Interesting method here. Rick, will it work?
No, we're talking about it, so that's what they wanted us to do. So yeah, that part of it's working. But I would have thought that with AI, it would have actually looked real. These are kind of cartoonish movies.
They are.
It was entertaining, but I don't think anybody's going to change their mind.
They look like vintage travel ads here, Jeannie. To Rick's point, kind of cute, but does this make somebody vote against a Democrat? Do we think migrants were headed for the Grand Canyon?
No, this is what parties do when they have absolutely no record to run on. They've spent the entire year passing no legislation. They're a do-nothing Congress. This is what you get. This isn't a threat. It's not real.
I'm here to bring out the best from Rick and Jeannie. Thank you both. Our signature panel on a Monday. I'm Joe Matthew. Hour 2 of Sound On starts right now.
from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The White House warns we are out of money to support Ukraine. Welcome to Hour 2 of Sound On as the Biden administration sounds the alarm on funding for both Ukraine and Israel as border talks struggle on Capitol Hill. We'll be joined ahead by Jack Fitzpatrick at Bloomberg Government for the latest as lawmakers begin their return to Washington. Bloomberg Economics says the recession is here now. We'll talk about this call, an important one, from Tom Orlick at BE as Israel prepares a wider invasion of Gaza. We'll be joined later for the latest on that from Bloomberg Economics Chief Geo-Economics Analyst Jenny Welch. So let's get to it, as always, with a look at Wall Street trading and an update now from Charlie Pellet in New York.
Thank you very much, Joe Matthew. It is a down Monday. Wall Street's furious bull run getting a Monday reality check. Stocks kicked off the week with losses. Bonds down as well, and a signal that traders' aggressive pricing of interest rate cuts by the Federal Reserve may have gone too far. We've got the S&P right now trading lower, down 33 points. That is a drop now of 0.7%. Dow Jones Industrial Average down 71, decline of 0.2%. NASDAQ is down 1.2%, down 167 points. 10-year yield 4.28% with that 2-year 4.66%. Spot gold down $47 the ounce to $2,025, a decline of 2.3%. Bitcoin is higher, up 5.1%, 41,762. Earlier today, we have Bitcoin above 42,000. Crude oil, West Texas Intermediate, down 1.1%, 73.23 a barrel. Lots of speculation and optimism in recent weeks about when the Federal Reserve will start cutting rates. How early could it occur? Perhaps next year. Lisa Erickson is head of public markets due diligence at U.S. Bank Wealth Management, and she was interviewed this morning on Bloomberg Surveillance.
With quite a few rate cuts priced into next year, in fact, some as early as March, really the issue is going to be not only when the Fed actually decides to move, but how that is relative to market expectations. And what we've seen in this cycle so far really is that the market has had to move to the Fed as opposed to the other way around.
And you can hear more of that conversation on the Talks podcast. You can download it wherever you get your podcasts. Starbucks shares are lower again today, down another 1.5%, extending their losing streak for an 11th session, which would be the longest rout on record for the coffee retailer. Again, Starbucks now down by just about 1.5%. So again, recapping, it is a down Monday. S&P down 33, drop there of 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, we thank you. The patented double point. You can see Charlie on YouTube. Join us as well in the studio. Search Bloomberg Global News. And if you're with us on the radio, on the satellite, we welcome you to the Monday edition with a very direct message coming from the White House today on funding for Ukraine. We're going to talk to Jack Fitzpatrick about this as Budget Director Shalonda Young sends a letter under no uncertain terms here. It reads, "We are out of money to support Ukraine." You can't get much more direct than that. Without congressional action, she writes, by the end of the year, we'll be out of resources to procure more weapons and equipment for Ukraine and to provide equipment from U.S. military stocks, which we've been doing for both Ukraine and Israel. Let's bring Jack Fitzpatrick into the conversation from Bloomberg Government. He joins sort of at this time every week. It's nice to see you. Happy Monday. We've got a lot of things I want to talk to you about the border situation as well. But of course, it all ties into Ukraine. Who's that letter for?
That is for Congress. That is a legislative deadline.
Is that to the speaker, though? Who's the audience?
Yeah, to the speaker, to anybody who could be pressured. And it maybe effectively it's more to senators because they are taking the lead in negotiations, but they have to go back and forth between Senate Republicans and House Republicans. Our colleagues who have covered this very closely have heard from people close to the situation that since last week when Speaker Johnson spoke to Senate Republicans, things have not moved in the right direction. So it's a combination of Senate Republicans, the Speaker, to Congress, because they didn't have a deadline yet. And I don't say that to undermine, I'm not pushing back that it's an actual deadline, but in terms of legislation, Congress needs an end date. And they didn't have one until now. They're being told by the White House if this doesn't happen by the end of the year, it's not happening.
By fill in the blank. Seems like they could have done that earlier, but we've been asking a lot of folks, even on this program, there's no magical pot of funding, she writes, available to meet this moment. We're out of money and nearly out of time. But if that hinges on a deal over the border and it's tied somehow to funding for Israel, to your point, Ukraine's timeline is not Congress's timeline here.
Right. I mean, this letter from the White House seeks to align them and say, Congress, you need to get something done in time to actually be useful to Ukraine. Now, it's important to keep in mind that if this really melts down, and it does not seem to be going very well right now, these negotiations, and the border talks include everything, because the Ukraine hinges on the border talks. Currently, leadership is planning to tie Israel funding into that. If the border talks don't strike a deal, there will have to be conversations about what alternatives are there. Does Israel move alone? Is there any way to help Ukraine in a more scaled back way other than the request from the White House? We haven't gotten to those alternate paths. So right now they are just saying the pressure's on for all of this which hinges on a border deal to happen in the next few weeks.
James Langford was on the Sunday shows, ABC This Week. He was asked about it. We talked about this with Rick and Jeannie a while ago. Surprisingly optimistic, considering what everyone's hearing, the headlines that are even crossing the terminal today. Now, granted, this is 24 hours ago. Here's what he said.
There's a reason that this hasn't been done in decades, because it's hard. It's very technical work, and there's a lot of challenges that are in it. And anytime you deal with border security, there are a lot of complicating features in this. So we're going through very, very detailed work.
And it wasn't just border security we were talking about, Jack. We're talking about, actually changing asylum law, along with some other very controversial proposals. Is it changing form as we're going here, or have they walked away from the table?
Well, there's a lot that is still moving. The core issue that they're not just discussing funds for border security measure per se has not changed, and that's the major challenge, is if you get into asylum policy and then a disagreement over that has led to what about parole opportunities, and is parole used to undermine any of these changes? It's very complex.
Parole was a big sticking point.
This is much more complex and difficult than, if you remember the shutdown over border wall funding, that was a fight over how much money. This is way more complex than a dollar figure, and that fundamentally has not changed. That's been the big issue here.
And we have how many legislative days to figure this out? I mean, is his optimism shared by the leadership that this is done by the end of the year?
Langford seems a lot more optimistic than other people, and that played out even on Twitter or X today. He posted again that talks are continuing. If you compare and contrast that post to Mike Johnson's post about the White House not making significant concessions, Langford is the optimistic one. They're supposed to be in session until December 15th. Congress has a way of pushing that back and missing one mini deadline and making another deadline. So, the end of the calendar year is the real deadline. Before Christmas, I guess, is functionally the deadline.
When do we start talking about another CR?
Well, to fund the government,
yes, the big one, not the supplemental.
They have until January 19th for 4 bills, February 2nd for 8 bills. They are not making a lot of progress on funding the government. No. They need to agree to top-line levels, at least the basics of how much they're going to spend for each of the 12 bills between the House and Senate. I've asked a number of times. They have not made progress on that. The more emergency issue is still Ukraine funding, because if the deadline effectively is the end of the year, that's a lot, way before January 19th. If not for that, they could have tied them together, but apparently that's not the case.
Yeah, boy, okay. CR, call Kevin McCarthy, right, see how that's going to go. Great to talk to you, Jack. Good luck this week. I know everyone's flying back into town. Jack Fitzpatrick, of course, at Bloomberg Government with us here on Bloomberg Sound On. And I want to pull you back now as we cast our eyes to the other end of Pennsylvania Avenue, the White House, and the talk of recession. that hasn't materialized yet. Remember, Bloomberg Economics said 100% chance we go into a recession this year. The anniversary of that call, I believe, just passed. And so now, it's easy to say, hey, well, it would never happen, guys, unless it started already. We're going to bring in Tom Orlick from Bloomberg Economics to talk about this in a moment. Remember, let's go back through time here. Here's Joe Biden in June. This is the 28th.
I've been hearing every month it's going to be a recession next month. The consensus is 2/3 of the economists and the major leaders in the banks think we're not going to have a recession.
Okay, let's fast forward a month. This is mid-July now, and the Treasury Secretary Janet Yellen talking about this call. The constant questions about the recession.
Growth is slowed, but our labor market continues to be quite strong. I don't expect a recession. I think that we're on a good path to bringing inflation down. The most recent inflation data were quite encouraging, that we're making progress on getting inflation down. But as I'd hoped and expected, that would occur in the context of a strong labor market, and we continue to see that.
Yeah, Goldilocks economy, right? Steady, sustainable growth, as we've discussed with members of the administration and with economists who support that view. But then I read the writings of Anna Wong this morning at Bloomberg Economics. We have long argued a recession will begin toward the end of this year, and the recent data corroborate that view. So are we in one already is the question for Tom Orlick, who joins us at the table now from Bloomberg Economics. Tom, it's great to see you. You've put a lot of time into this research, and you're feeling pretty good about your call. Did a recession begin in October?
So I think it's important to take a step back on this, Joe.
You can pull me in off the ledge.
Let's not forget that it wasn't so long ago that the United States was suffering from 10%, close to 10% inflation. Now, how does the Federal Reserve deal with inflation? Well, it deals with inflation by squeezing demand in the economy. And when you squeeze demand in the economy, what happens? You raise unemployment and the economy goes into a recession. So our expectation, our forecast, the long-standing call from Anna and her team, which you mentioned, is for the US to go into a mild recession, starting around now and stretching into the first part of next year. Now, if that's what happens, that would be an extraordinarily lucky escape for the US economy. If you told economists back when inflation was pushing towards double digits, you can get out of this with just the mildest of downturns, I think pretty much anyone, including Janet Yellen, probably would have taken that offer. That's our expectation.
Wow.
And when we look at the unemployment data, which has already edged up from its trough of, I think, 3.5% up to 3.9%, what we're seeing is labor market signals which are pretty firmly aligning with that view.
Last time we had 2 months of contraction, we were told that it was not a recession. I think a lot of people actually learned a lot about economics over the course of those weeks. Many were politically motivated to say that that's crazy, but most economists agreed that the stars did not align to show a recession, even with the contraction that we saw. How would you qualify it then? Give us an advance view of what that would look like.
So I think that the sort of the layman's understanding of a recession is it's two sequential quarters
If I said months, forgive me.
Contraction in the economy, right? So two negative GDP prints in a row. Frankly, that's not a bad definition of a recession, but it's not the definition which the US follows. The US has a group of very, very senior economists at the NBER, and their job is to look at a bunch of different data, how much spending is going on, how much investment is going on, what's happening in labor markets, and make a judgment about whether the US economy is in recession or not.
Posthumously.
Exactly. They don't do it in real time.
Yeah.
Now, that brings us to the question of these recession rules, right? Probably the most famous of them, the Sahm rule, named for Claudia Sahm, formerly a Fed economist, now I think one of the contributors to Bloomberg Opinion. And what Claudia Sahm noticed is, well, if there's an increase in unemployment from its trough by about 0.5 percentage points, then almost always that's a signal that the US economy isn't about to go into a recession, it's already in a recession.
Wow, okay.
Where are we now? Well, the unemployment rate hasn't quite increased 0.5 percentage points, but it's already increased 0.4 percentage points, and we expect it to make up that remaining distance in the payrolls print this Friday.
It's interesting that we talk about soft landing. Nobody's really qualified what that would look like either. Is it possible that a mild recession you're describing is a bit of a soft landing?
So it's interesting, Joe. I mean, if you follow the kind of macroeconomic debate on Twitter, it's kind of knives out, right?
Oh, I bet you hear from a lot of folks.
The soft landing optimists have got their knives out. The hard landing pessimists have got their knives out. But if you look at what actually the soft landing optimists and the hard landing pessimists are forecasting, there's not a vast gulf between them, right? The soft landing optimists would concede that the economy is going to slow and that unemployment, which has already drifted up a bit, will probably drift up a little bit higher. The hard landing pessimists, and that's the camp we're in, say, yeah, it's going to slow and there's going to be a mild contraction. And guess what? Unemployment isn't going to drift up to 4.2, 4.3. It's going to drift up all the way to 5%.
Okay, so maybe there's not that much difference between the two is what you're suggesting.
So
there's a fine line between a hard and a soft landing, the way you're describing them.
Yeah, I think let's imagine we were in a world where the economy was growing at a steady 2% pace.
Sure.
And there was a 0.5% variation from one quarter to the next, right? I think most people in the markets would not regard that as an incredibly consequential move. It's the fact of where we are in the cycle, right? It's where we are in the cycle as the Fed approaches the end of its tightening, as unemployment starts to drift up, which means that margin of difference between the optimists and the pessimists right now also happens to be the margin of difference between a soft landing and a mild recession.
That's incredible. You know, this is good news for Joe Biden. It might sound contrarian, but that means the recession's done before the campaign gets real, the general election in the middle of next year.
So I think folks who think deeply about the relationship between politics and the economy and the elections, what they tend to say is that views on the economy get baked in about 6 months before the vote.
There you go.
Right? So from Biden's perspective, what's happening right now is important.
Yes.
But what is going to be really important is what's happening in May, June, July next year. Now, if our call plays out, what could be happening is the beginning of a recovery.
Yeah, isn't that something? Don't be a stranger. Tom Morlick, we always love talking to Tom from Bloomberg Economics. The call is out. What do you think? We in a recession right now? Ask your neighbor. You might be surprised by the answer. I'm Joe Matthew in Washington. This is Sound On, only on Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index all declining. Interestingly, though, the Russell 2000 keeps on going up another 0.7% today. But to put that in context, we've got the S&P down 0.7%, down 32 points. The Dow is down 81, drop there of 0.2%. NASDAQ 100 index down an even 200, right to the decimal, lower now by 1.2%. NASDAQ Composite Index lower by 1.1%. Wall Street's kicking off the week with losses, stocks and bonds down, in a signal that traders' aggressive pricing of interest rate cuts by the Fed may have gone too far. 2-year now yielding, we've just got the 2-year 4.65%, with a 10-year yield 4.28%. Spot gold trading lower by $47 the ounce, down now by about 2.3%. And West Texas Intermediate crude is down 1.4%, $73.04 for a barrel of WTI. Bitcoin now surging 5.6%, 41,941 on Bitcoin, was trading above 42,000 earlier today. Roche Holding has agreed to pay as much as $3.1 billion for Carmot Therapeutics. It's a developer of a new type of weight loss treatments that has sparked a pharma industry gold rush. Shares of Roche, the ADR, is up now by about 2.7%. Again, recapping, U.S. stocks are trading lower. S&P 500 index down now by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
More calls for restraint as Israel enters the next phase of what appears to be a widening invasion of Gaza. They're now heading to the south and warning again people to evacuate, which is getting pretty confusing for 2.2 million people who live in Gaza City. They've already moved, many of them, to the south. The problem is Hamas followed, and so now is the IDF. We heard over the weekend, though, from the Secretary of Defense, pretty important remarks considering it's the head of the Pentagon talking here, and Secretary Lloyd Austin. This was the speech he gave at the Reagan National Defense Forum in Simi Valley over the weekend. Lloyd Austin here.
This kind of a fight, the center of gravity is the civilian population. And if you drive them into the arms of the enemy, you replace a tactical victory with a strategic defeat. So I have repeatedly made clear to Israel's leaders that protecting Palestinian civilians in Gaza is both a moral responsibility and a strategic imperative.
Strategic imperative. And that's where we start our conversation with Jenny Welch from Bloomberg Economics. She is their geopolitical advisor, which ends up in the wonderful title Geoeconomics Analyst. Great to see you. Welcome back. Jenny, it's kind of amazing here. And for folks who haven't heard you on the program, you worked for the Biden administration. You're a former intelligence official, and you know the weight of comments like that from the Secretary of Defense. This is the man running the military, not on the political side of things. How important is that?
No, I think the Secretary's comments were quite stark, and in particular stark on the idea of concern about civilian casualties here. At the same time, what I think this is pointing to is the administration responding to live concerns about how the war is being prosecuted, and also future concerns, as he was speaking there, to sort of the strategic imperative of not taking actions now that will plant the seeds for future conflict, future hostilities.
In that we're creating terrorists
exactly
by killing civilians in this case. Not that the U.S. is doing it, but our support is there, and a lot of people see the administration's fingerprints on this. Is that fair?
I think that's exactly how a lot of people are looking at it. The U.S. is one of the major backers of Israel, not just politically, diplomatically in the UN, but also in terms of military assistance. And in fact, that's very much a live issue right now, with the administration asking Congress for additional support to provide Israel with things like Iron Dome interceptors and additional material that's being used at this very moment.
Israel says, what do you want from us? We were attacked. We didn't tell you what to do after 9/11. And Hamas is literally surrounding itself by civilians. So how do you neutralize that threat without collateral damage?
It's an incredibly challenging environment from a military perspective, tactically speaking. As you noted, there's not a lot of strategic depth here. The insurgents that Israel is aiming against are oftentimes co-located or in very close proximity to civilian infrastructure, and I think that's where the concern comes in. The other concern that the Israeli forces have is, about things like airstrikes, which from a distant perspective seem to be not targeted enough. And why aren't they using more ground forces? The concern from the other perspective is that is an incredibly hostile and dangerous environment, and having those sort of advanced airstrikes is meant to help protect Israeli forces when they do eventually send in ground troops. But it's a very complicated situation. I think the other thing I'd flag is it's a very complicated information environment. There's a lot of different narratives out there, and it makes it really hard to get ground truth.
Well, boy, that's for sure. Look, this is your area of expertise. Is it fair to criticize Israel then? Is it possible to be more strategic, or is it easy for politicians to suggest as much?
I mean, I think there's a lot of different perspectives at play here, right? And I think where I would say the administration is coming from is the perspective of still very much backing Israel. They're still trying to send military support to Israel. They're still backing it in the diplomatic field. But the comments over the weekend point to the fact that they're also using that influence, that leverage, that relationship with Israel to push them not just in the direction that I think serves American interests, but from their strategic perspective will ultimately in the long term serve Israeli interests as well. And that's, I think, some of the movement you're starting to see right now publicly, but it's been happening behind closed doors, I think, since October 7th, probably.
That can be a tough message to sell, obviously, in this environment. But we're seeing U.S. warships attacked on the regular. It seems like we had another one last week, just over the weekend now in the Red Sea, a warship attacked over the course of, I think, 7 hours, down 3 different drones, and issued quite a statement here talking about the threats from Iran proxies. If I could pull this up here, Central Command says the attacks were fully enabled by Iran in response to the Israel-Hamas war. If that's the case, has the second front opened?
I mean, I think this has been kind of an ongoing challenge, right, is the issue of these proxy battles that are happening. And it started very soon after October 7th. I mean, Hamas itself is backed by Iran. Hezbollah in southern Lebanon, which has also been very much engaged and active, is also backed by Iran. And then now you have the Houthis involved as well. So I don't think this is necessarily a brand new development. It's certainly an escalation of the situation. And I think from markets' perspective, the concern is going to be, is this putting some of those key trade routes at risk? I think at this point, I have pretty high confidence that certainly the U.S. Navy and other forces in the region are in control of the situation and will be able to manage the risk. But I think every time this news story pops up, it leads to this concern of this is a key choke point. Is this going to get into more of a fray that blocks traffic?
Right, yeah. Do we send more assets to the region?
We've already got quite a lot of assets there. Yeah, exactly. And
do we start using them more, Jenny?
Well, I think they've been used pretty effectively defensively, right? And I mean, one of the things to underscore here, which might be an obvious point, is yes, some of these forces are very well trained and well equipped, but compared to a major military like the United States, it's a really asymmetric sort of battle here. And in particular, when it comes to our ability to provide air cover and larger defense, I think that's where our strength is, less so focused on numbers and more in terms of quality of our systems.
So what are we in for here? They're dropping leaflets. They've put out maps now that cut Gaza into 2,400 blocks. It's getting that specific, telling people where to move, where to leave. Israel's asking for credit, by the way, when it comes to that, saying that they are trying to spare civilian lives. But we've got a list of areas to be evacuated at 34 now, up from 19 the day earlier. What are we about to see in southern Gaza?
Well, I think that's part of the concern is that that's, as you noted, where all the civilians from the north have moved down into, and it takes time to move people. It takes time for people to get the information that they need to move, and in some cases, they might not be able to, not only be if they have injured folks who aren't able to move, but Israeli forces have said before that they suspect Hamas might be forcing people to stay in place to provide that kind of civilian shield cover that we're very concerned about. So I think what we're looking at is a major operation that's going to be moving south. And I think that's why you're seeing a lot of this debate coming out into the open about how do we do that in a way that, at best possible, tries to preserve civilian life.
Sure. I guess this could be any moment now, of course. We've seen a bit of a pattern, though. When things start to go the way we don't like, Secretary Blinken gets on an airplane. Is he going to be back there this week?
I'm sure he will be making many more visits to the region before all of this is over.
If not shuttling through the region, right?
Yeah, absolutely. I mean, he's been incredibly active with the diplomacy since October 7th at an incredibly rapid pace. And I think it demonstrates the fact that this is a region that the United States still knows very, very well and is leveraging all of its relationships to try and maintain some semblance of stability, or at least prevent this from breaking out into a wider conflict.
What's it going to feel like when Vladimir Putin shows up in Saudi Arabia?
That's a really great question.
And that headline today. The timing is not lost on us, right?
Yeah, and I think there's been, from the beginning, a lot of questions about what role is Russia going to play in this? What role is China playing in this? What role have they played? I mean, I think from Russia's perspective, there is a benefit here in the sense that as long as the U.S. is focused on Israel, and in particular focused on diverting aid to Israel, that can really undermine Ukraine, because Ukraine has become I should say this. The United States is a top provider of military assistance to Ukraine. And some of the demands from Israel and Ukraine are the same. The U.S. only has the capacity to fulfill so much.
Well, I'll tell you, this letter today from Shalana Young about Ukraine funding, we were talking about it right before you came in. We're out of time, we're out of money, is a pretty big deal. And I would love it if you could come back with us this week to talk about it, because this border debate, Ukraine debate, will progress over the next couple of days. And I'd love to know where your head is at that point.
Yeah, I certainly hope it progresses.
Yeah, well, exactly. Well, it's going to progress for better or worse, I suppose. Regress, we'll find out. Jenny Welch, great conversation, as always, from Bloomberg Economics with us today on Bloomberg Sound On. Let's get you up to date now on world and national news beyond everything else we're talking about. Here's Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Federal prosecutors are accusing a former U.S. diplomat of spying for Cuba's intelligence service. Attorney General Merrick Garland says the alleged crimes by Victor Emmanuel Rocha stand apart from many others.
This action exposes one of the highest reaching and longest lasting infiltrations of the U.S. government by a foreign agent.
Garland says Rocha, who was a former ambassador to Bolivia and was posted to Mexico, Argentina, and other countries, is accused of working for the Cuban government since 1981. The indictment suggests Rocha gave Cuba insight into U.S. policy thanks to his access to classified materials. The U.S. Supreme Court is being asked to overturn a deal worked out in bankruptcy court for Purdue Pharma to pay out $6 billion to governments and individuals impacted by the OxyContin-sparked opioid crisis. Bloomberg's Irv Chapman says the case concerns whether the family behind Purdue, the Sacklers, should be shielded from further lawsuits.
Tracy, justices on both sides of the court seem supportive of the bankruptcy agreement. Brett Kavanaugh.
The opioid victims and their families overwhelmingly approved this plan because they think it will ensure prompt payment.
Justice Elena Kagan.
Overwhelming the support for this deal among people who think that the Sacklers are pretty much the worst people on earth.
Lawyer Curtis Gannon argued otherwise.
There are other opioid victims with also heartbreaking and tragic losses that are saying we are not consenting.
The Sacklers lost the drug company but remained wealthy. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.